Hello, everybody. Welcome back to another episode of The Market Close. It is Wednesday, August 14th, 3:45 p.m. And we are here live on The Market Close. This is going to be an exciting one, folks. Why? Because, well, we have Robinhood July metrics after the bell, which is going to be very important to see how the street interprets those metrics and what ends up happening for Robinhood. You've got Palantir that was at $31 for, I would say, the majority of the day. It just fell like last hour back into the 30s, but still holding the high 30s. We've got 14 minutes left until the market closes. It does look like we are going to close above $30 for the third time in a row. So, or not third time in a row, but third time since 2021, second day in a row. So that's going to be very exciting in the context of Palantir. And obviously that's going very well for Palantir shareholders if you even bought in the low 30s and the high 29s. I mean, it's not going too bad. So we'll see how Palantir ends up closing, but a really nice day for Palantir and exciting stuff for them. A couple of other pieces of news we have to get through. It is officially 13F season, and 13F season means that we are going to start to see a lot of hedge funds and fund managers disclose what they did in Q2. And maybe they, have even evolved since Q2 because we're into Q3. So it's not always accurate, but a decent amount of it is accurate. Here's the first thing I want to show you guys. Michael Burry is loading up on Alibaba. Michael Burry on Alibaba. Really interesting, dude. I mean, I know he liked Baba, added 24%, now is 155,000 shares. I didn't know he cared that much about Alibaba. I mean, I did, but I didn't know, again, it was going to be that big of an ad. To add by a quarter stake is a lot. So 24%, 155,000 shares, 11 million bucks in Baba. He added a new stock called Four. I know a lot of you guys know Shift 4 Payments. I'm still doing some DD on them. I know they're an interesting company. A lot of people like them. Don't have too many thoughts on FOUR yet. But I know, people care about them. So he initiated a 100,000 share position in them. JD.com sold about 30%. Baidu added 87%, which is Google's or China's Google. So he is going very long China, or he thinks there's a massive rebound that's going to happen with Chinese companies, given Baidu and Alibaba's, at this point, 33% of his entire portfolio. But that's one of the first things we got from Michael Burry today in terms of different updates. Second of all, we also have a couple different headlines. Well, let me show you one of the headlines that I'm looking forward to. Stanley Druckenmiller, we don't have his updates yet. However, if you forgot what he bought last quarter, we're looking at $660 million of a small cap position. I'm really curious if he still has this position. And the reason I'm really curious if he still has this position is because, well, small caps haven't done that well. And I don't know, dude. I think small caps will do well. It's a call that he has, so I don't even know what the expiration date is on those calls. But if it's a call till December, I mean, the theta is going to catch up pretty quick. So either he got rid of that, maybe he sold it right at the top when it was at 228 on the FOMC meeting 3 weeks ago, or maybe he's holding that, maybe he's bag holding that. So we'll get an update from that. Second of all, he added 700,000 Palantir shares, which is a small stake for him, but still, he's up 40% on those shares. I wonder if he bought more Palantir, and if he truly believes, remember, Stanley Druckenmiller's thesis was that, hey, software is going to catch a bid when it comes to AI, not just the hardware companies. We saw Eric Schmidt this morning talk about NVIDIA and basically saying, hey, you need to buy NVIDIA because NVIDIA is going to get all the demand, which he's probably going to be right about. But Druckenmiller does not believe NVIDIA is going to keep having the types of margins they have and basically the monopoly they have. And so he sold out of it at about $90, split adjusted, and moved a lot of that money into regionals, into Palantir, into IWM. So it's going to be interesting to see how kind of that revolves into. Also, I'm curious, did he get rid of regionals? Regionals ran, I think, 15% since he bought, and I think he bought 345,000 shares of the KRE Regional Banking Index. So either he still is holding that and is waiting for the rate cut because that's probably really going to help regionals, or he sold it. And if he sold it, I'm curious then where did he deploy his capital? I really am curious if he deployed his capital into big tech on August 5th. Now, we're not going to find out all of that yet because it's a quarter behind. But if he did sell and raise cash, maybe he's deploying it into some other opportunities, or maybe he's just keeping cash. So I think all of that information we're going to be able to see over the next coming weeks. Meet Kevin looks like he's going on the defense. So he sold Google, sold NVIDIA, sold AMD, sold Robinhood, sold Meta. By the way, we have Robinhood metrics in about 15 minutes, so I'll show you guys that live. He sold Microsoft, not selling the entire position, but reducing them by the percentage points you see right here. And he bought Cooper Group, PennyMac Financials, Rocket Mortgage Company, and United Wholesale Mortgage Company. All of these companies deal with lending and specifically mortgage loans. Now, Mr. Cooper and PennyMac Financials, I think they do other stuff than just mortgages, but UWMC and RKT uniquely are around mortgages. So I'm kind of curious why he went that route. Obviously, as Matthias says right here in the chat, it's a great play for rate cuts, and I agree with that. But going heavy on that in the context of, he added 10%, added 14%. I guess that's relatively heavy for the size of his portfolio. It seems like that's his play on the rate cut. And the reason that's interesting to me is because he's not going the small cap route for the rate cut. He's not going the regional bank route for the rate cut. And he's not going the growth route for the rate cut. So either you for example, you either go long TFC, long Enphase, or long IWM, right? Those are three ways to play the rate cut. That's kind of three of the mainstream ways people are thinking of the rate cuts. Rates come down, small caps get benefit from that. Rates come down, banks get a lot of benefit from that, specifically regionals that have been sold off since the Silicon Valley banking crisis, or growth stocks like Enphase and Tesla catch a bid because now it's cheaper to finance solar panels on your house. So you'll have more demand for solar. Seems like he's going the opposite of those three routes, and he's going into mortgages, which I think will do very well in a rate cut environment, in an environment where we have lower rates. But a little bit of a contrarian play. I haven't seen people load up. I know RKT has been a popular ticker, but I haven't seen a ton of people load up on mortgage companies as their play for rate cuts. So I think it's probably a short-term trade for him. I don't think he's going long on that for the rest of the year, but probably playing that for a September bounce if we get the rate cut, as those stocks theoretically should do well. All of those stocks that he bought are up almost 20 to 25% year to date. So it's not like he's buying them at the bottom. He's buying them up as they're up, decently for the year. But still thinks he has some room to run on those for rate cuts. S&P at 543, up 0.3%. Palantir $30 and 89 cents. Nvidia was at 118 this morning. Now it was out almost 120. Now it's at 117, so still up 1.28%, but it was almost up 3%. Microsoft right back to where it was before it collapsed on earnings. It collapsed from 416 to 385, and then fell again to 385 after the August 5th collapse, but right back at 416. Apple at 221. Google, they have not been able to give Google a break. Google's still at 160. It bottomed at 158 today, but that DOJ Bloomberg investigation that Bloomberg reported seems to be, pulling it down. So Google not been able to catch a bid. I did ask on Twitter who bought the dip on Google, and it was kind of 50-50. Some people said, yes, it's stupid to be at this price. Other people said, they still feel LLMs are going to take away the search monopoly that Google has. So right now, Google down 2.54% of the day. Now, Apple, we have some interesting news on Apple as well that I'm curious what you people think about this. David, thank you for the super chat. He says, hey, Amit, what are your top 5 holdings? Mine are NVIDIA, Apple, Tesla, Palantir, ASTS. Mine's is really just Palantir and Robinhood. Few shares of Tesla, few shares of CrowdStrike, few shares of Rocket Lab. But in terms of real weighting in the portfolio, it is Robinhood and Palantir. And so we'll see how that portfolio adjusts going into 2025, given, how some things play out. But as of now, it is mainly Robinhood and Palantir. Okay, so Apple is back with a new product, folks. They failed at the Vision Pro. They failed at electric cars. And I don't say failed in a bad way. It's just objectively, those products really weren't a hit. They are pushing ahead with a tabletop home device in shift to robotics. So this is reported from Bloomberg. The company is now a team of several hundred people working on the device, which uses a thin robotic arm to move around a large screen. The device is envisioned as a smart home command control, video conferencing machine, and remote controlled home security tool. Someone posted a picture. I think it's kind of going to look like this, but more advanced. Apple has now decided to prioritize the device's development and is aiming for a debut as early as 2026. The company is looking to get the price down to around $1,000. From that description, what do you guys think? I'm really curious. Do you guys think an iPad-like display with a robotic limb is going to be their next evolution of a big product, dude? And you know what? I saw this headline and I was like, maybe this is why Buffett sold. And the reason I said maybe this is why Buffett sold, I don't want to be the hater today because I know everyone's looking at this and thinking this is stupid. I'm trying to think of the contrarian perspective because I like being contrarian. I'm trying to think hey, how's this exciting? And I really can't. I can't think of it, dude. I don't know why people need this. I don't know why people are going to use this. I barely use my iPad, an iPad with a robotic limb. Like, if you have humanoid robots, that automatically replaces this. And I'm not saying robots are coming tomorrow, but it's like, what's the point of this product? How are you going to get a version 5 on this if version 5 comes out in 2030 and by then you've got Optimus walking around the house doing the laundry? Like, I don't know, dude. I got to call Steve. Yeah, on Friday. By the way, Steve, dude, I felt so bad last night. I was really busy yesterday, like very, very busy. Steve really wanted to call. I could not call. He's been doing due diligence on this new company. And I think on Friday, he's going to give you guys the DD. That sounded really weird. He's gonna, but on Friday, he's going to, when he comes on the show, he really wants to call me. I was like, Steve, I won't even pay attention to your DD. Again, that sounds really fucking weird because I came back from the gym last night, dude. I was tired and I fell asleep. So he'll come on Friday, but he's really excited about this energy stock that's unique for data centers. So we'll talk about that. But I'm also going to ask him about this Apple thing because he is yet to believe that the Vision Pro is a failure. And unfortunately, like, it is what it is, dude. People are not using it. So he hasn't admitted it yet. But I think now the product roadmap from Apple is just not in the right direction. And, it's easy for me to say that. I'm not the CEO of Apple. I'm not the one who has to grow revenues off of a $400 billion base, right? So, like, I get it. I don't want to sound like a hater here. It's just, it's tough, dude. Either you got to give a dividend, you got to buy back more stock. I mean, you really got to convince people for a reason to believe in the story, especially at its multiple outside of just the AI phone. And you're going to need some new products. And so we'll see what ends up happening with Apple. 30.98 on Palantir, 3 minutes until the close. Let us see if Palantir can get to 31. I'm looking at resistance right now. We are... someone needs to buy 21,000 shares. So we're going to need someone to buy a decent amount of shares to overcome that 31. We did hit 19 on Robinhood, by the way. We hit 1906 right there at the top, and we stayed there for a good 20 minutes. And then the entire market came down. Like at 12 p.m., everything came down. Palantir would probably be at 31.40 right now if the market didn't come down. Palantir was at 31.37. Then it came all the way down to 30.75. But even then, dude, it held 30.70. Like, dude, the street is really normalizing Palantir at 30, which is just incredible. Shout out to Paper Gains in the chat. Yes, we will get the metrics in about 2 minutes, maybe 4:05-ish. So in about 2 minutes, we'll see. By the way, guys, I just finished recording a video as well on the media implications of Palantir. It's a long video. It is not 33 minutes like the voice note, but it's 28 minutes. So that video will be uploaded at 7 p.m. If you got 28 minutes, put it on in the background. It's me blabbering around the media's relationship with Palantir. I think you'll enjoy it. It's less about Palantir news. It's more about a deep dive into the next 5 years of the media compounding effects on Palantir. And I'll know if you watch till the end. I will know. And you'll find out. If you watch to the end, I'll definitely know you watched to the end. So make sure you check it out. It's like me sending you a voice note publicly on YouTube. All right, Palantir's at 31. We have about a minute until the market closes. Let's see if we close at 31, dude. If we close at 31, this will be the first close above 30. I mean, we closed above $30 yesterday, but you know what I mean? Like in that 31 range in 3 years. So let's see at 4 p.m. Do we actually get a $31 close? Then we have after hours trading. We'll see what happens, but $31 close. Let's see if that plays out. David, thank you again for the super chat. Amit, speaking of humanoid robotics, there are rumors out there that you are actually a very advanced humanoid cyborg from the future. Dude, you know what I am? I am just the hay in the needle stack. Okay, that's what I am. And hopefully that's what you guys continue to get value from, which is why you come back to the channel. All right, 30 seconds, folks. 30 seconds. Let's see what we get on the close. S&P going nice into the close at 544. I think we get the Robinhood metrics basically at the close, maybe a couple minutes after. Those metrics are going to be important. We already know what those metrics look like, but if they're very good, we'll see. We'll see how the street reacts, how the stock reacts. The stock tends to move on those metrics, and we'll see how it plays out. All right, 4 p.m., August 14th. Thank you, everybody, for being here. The stock market is now closed. Wow, Palantir closes at $30.99. I mean, we hit 31 after hours, but still $31 or $30.99. That's funny. That's really funny. So that's so funny. $30.99. Not bad, dude. At the end of the day, can you really complain if you're a shareholder? I mean, like, it's being normalized to buy Palantir Technologies Incorporated at $30 a share. We hit $70 billion market cap today. Right now, we closed at 69.3. but pretty incredible for Palantir. S&P at 543, QQQ 463. It was up. It was basically flat on the day, but it was green. Nvidia 117 on the day, Microsoft 416, Apple 221, Disney 86, Netflix 661, Google 160. And then you've got Palantir again at $30.99. All right, Robinhood. All eyes on Robinhood now. Let's see what happens with the hood. The fact that it got to 19 today means that it has some pep in its step. It obviously wanted to get to 19. I think algos kind of naturally took over, sold off the entire market at 12 p.m. And then it just wasn't able to recover and catch a bid after that and get a decent amount of volume. I think the street is also really waiting for these metrics because they want to see it's even better than guidance, right? You're like getting the metrics, like you get a month's worth of data and you can pretty easily interpret what that means for revenues. So that's going to be very important for Robinhood, and we'll see what happens after that. Oh, Cisco has earnings. Okay, so we'll cover Cisco earnings as well. I'll pull up CNBC, and as soon as we get those numbers, we'll get into Cisco earnings. Does anyone own Cisco in the chat? Cisco it's up a little bit after hours. I think the numbers are not out yet. I know Steve likes Cisco, so he probably still owns a decent amount of Cisco. Okay, cool. So I have Cisco here. Once I see results, I have it loaded up. I will switch and we'll see what we get from Cisco. And then Robinhood, here are the metrics. This is the website that I am refreshing. Also, at about 5 o'clock or like 4:45, we're going to watch a whole podcast with Vlad around crypto. So I said I was going to do that watch party yesterday, but we're going to do it today at the end of the market close. And so if you're interested in crypto and what Robinhood is doing with crypto, we'll watch that for about an hour. Okay, so press releases. Oh, there it is. Wait, no. That's second quarter results. That's not July results. So we're waiting for the July results, July monthly results. That's what we are looking at. Let me go back to the stock and I'll refresh it as we see it. Probably 405-ish. 405, we should get it. Cisco, still no move on Cisco. Do we have any other earnings after the bell? Let me see. Tomorrow's big for retailers, Walmart, Alibaba, etc. After the bell today, D-Lo. I've heard of that one, D-Local. STNE, I know that one. People like Stone. What is that one? Stone Co. I think Buffett owns some of that. D-Local Limited. I think that's an e-commerce thing. I might be wrong on that one. That's pretty much it. Those are the main companies. And then Cisco. So Street wants 85 cents out of Cisco and revenue of $13.5 billion. 85 cents in revenue of $13.5 billion. Hood metrics out at 405. All right, so we got 2 minutes. 2 minutes. Again, we know the volumes are going to be crazy. Like, we know they're going to be 20% higher than they were last month because they told us that. I'm curious about deposits. They said over 4 billion. Is that 4.2 or is that 4.8? Right? Like, is that 4.3? And then I'm curious about the volumes. Like they said 20% higher, but is that just across the board? Is one category like 25% higher? So we'll see the metrics pretty quickly and be able to tell from there. Palantir after hours down just a little bit at $30.98, but nice close at $30.99 on the day for Palantir. On Yahoo, it says a $31 close. All right, some people might have let me see my Robinhood. Does it have a 30? I have a $30.90. I have a $31 close on Robinhood too. Yeah. So on Webull, it's wow. So on Robinhood, it says 31. So some platforms it has something different. Other platforms it shows you a $30.99. All right, not bad. Basically $31 close, dude. Basically $31 close, which is pretty damn exciting. Chana, hello, Mint. Nice sunflower shirt. Thank you. I like the shirt, so glad you guys enjoyed it as well. All right, we got 1 minute. 1 minute. Trading View says 30.99. Yeah, a bunch of them probably have some different numbers there. Nike's up 4% today. I didn't know that. Wow. I haven't looked at Nike all day. Starbucks, I think, is still down. Where's Starbucks? Down 2% on the day. Nike up 4% after hours. Did Nike have earnings today? No way. I feel like I would have known that. No way. I'll check out why. I don't know why Nike's up. I'll check. That's weird. I feel like I definitely would have known that. I definitely would have known that if they did. All right. So we are still waiting. Metrics should be out now. I am refreshing. And let's see what they report and where it goes from there. Cisco making moves. Cisco's up. Let's check Cisco real quick. Cisco. Wow, Cisco's up 5%. All right, not bad. Cisco, again, a company that doesn't move that much really on anything. Cisco up 5% right now. All right, let's see these Robinhood numbers, then we'll try to get Cisco as well. All right, here we go. I got it, folks. Here we go. I got the numbers. I'm playing it live. Let me see if so that's the press release. Let me see if they put the monthly metrics out as well. No, not the monthly metrics yet. All right, so here we go. July numbers for Robinhood. 70,000 accounts. I said 50,000. They got 70,000. Oh, you can't see it. You can't see it. Here we go. 70,000 accounts. Assets under custody, 144 billion. I thought it would be 141 billion, so not bad. Net deposits were 4.2 billion. I thought it was 4.1. I was accurate there. I thought it would be the case. Equity notional trading volume was 104 billion, up 21%. Options were 160 million, up 22%. Crypto was 5.3 billion, up 23%. All of those numbers I kind of pretty much came in line with. I thought it would be a little bit less for options, a little bit less for equity, and basically in line with crypto. Margin 5.4 billion. That's up 8%. I thought it would be 5.2 billion. Cash sweep 21.8 billion. I thought it would be 21.5 billion. Total security lending revenue was 21 million, up 24% year over year. There you go. Those are the metrics. Bill Ackman bought 3 million shares of Nike. What? Holy crap, dude. Robinhood is not moving at all after these numbers. Robinhood doesn't give a shit. The market does not. The market's occupied with Bill Ackman. What? Bill Ackman? Did he really, dude? Did he buy shares of Nike? Holy crap, dude. I gotta see if that's real. Seems like that's true. We do have Cisco earnings right now. Okay, let me get Cisco earnings on CNBC, then I'll get the Nike stuff, and then we'll dive into Robinhood. Do I have the numbers right here? Yeah, I think this is it. Wow, Ackman. That is interesting.
Above estimates at 87 cents, adjusted revenue of 13.6 billion, also a beat driven in part by software that saw a 15% jump in subscription sales and product order growth of 6%. That excludes Splunk, is higher than what Wall Street was forecasting. Cisco did announce a restructuring plan, pre-tax charges of up to $1 billion consisting of severance and other one-time termination benefits. So clearly job cuts are a part of this. We'll look to the earnings call to get more details on that. That call begins at 4:30 p.m. Eastern. We're looking at the stock up 5%. Worth noting that in addition to what we're anticipated to hear, Morgan, Cisco did announce layoffs of around 4,000 workers in February amid sluggish demand and efforts to increase efficiencies in its business. Back to you.
Okay, sounds like...
Okay, so Cisco beat on the top and the bottom line. It is accurate, folks. Bill Ackman bought 3 million shares of Nike, dude. Holy freaking crap. I'm tweeting that right now, putting it out there. That is incredible. There it is. So he reduced Hilton by 2.4%, reduced Chipotle by 22%. He got the top on that, or at least the short-term top on that. Google, he sold off 20% of his Google. Actually, no, 28%, because he owns Goog and then he owns Google. There's two different Googles there. Wow. Holy crap. He bought Brookfield. That makes sense. And then he bought Nike. That one, I mean, I guess Bill Ackman bought Nike because he thinks he should just do it. Anyway. Dude, what? He sold off 28% of Google to buy Nike? What is this? What's going on here? And he messed up our Robinhood news because we can't even analyze Robinhood because we have all this news now. Robinhood is flat after hours. So the street does not care about these metrics. Now, my initial take for why the street doesn't care, maybe we'll see some buying pressure in a little bit. I said this on the morning open today. I think the market is still risk off. We have not confirmed that we are out of the Japanese yen carry trade, and Robinhood at the end of the day is a bull call in the market. And so until the market definitively feels we are ready to just go higher and there's no chance to retest those bottoms, I think Robinhood's it's going to either be flat or struggle because like the market doesn't know what to do with Robinhood, even though their metrics are phenomenal, right? You can be producing really good metrics, but if the narrative of the broader market isn't with you yet, it's just going to take more time. I still think that's a buying opportunity. I bought more Robinhood today. I bought Robinhood yesterday. So to me, it's just more time to load up. And especially when the analyst community already agrees with us, you're getting $23 targets, 29 targets, 32 targets. You don't get those targets if like people don't see the vision. The problem is, it got re-rated completely. The entire market did after that August 5th collapse. So Robinhood really not reacting to this, but the metrics absolutely, it's sensational. Bill Ackman though took the headline. Let me get Cisco's numbers on the top and bottom line. I know I played it on CNBC, but just to restate it for everybody. Cisco revenue was 13.6 billion. They beat slightly by 13.5 was expected, and 85 cents EPS, 87 cents they put in. So 2-cent EPS beat to about 30-40 million revenue beat, which is not bad. Stocks up 5%, but Nike, that is the big deal. Ulta's up 10%. No way. Buffett did not buy a 10% stake in Ulta. There's no freaking way, dude. There's no way. You guys are lying. Holy crap. Buffett was accumulating Ulta. He sold Apple for Ulta. Holy crap. He sold Apple for Ulta. Warren Buffett bought Ulta Beauty? What? What, bro? This has to be insanity, dude. Now Robinhood's not moving because everyone's paying attention to Ulta and Nike, dude. Holy crap. What is going on? He bought Ulta Beauty out of everything. He buys makeup. Ulta Beauty, hold on. Here's the exact the screenshot. This is not the most actually I can go to the website. Why am I I forgot do I have the right website? Damn, I forgot the name of the website. But I'll go to the website in a second so you guys can see it in high definition. But there you go. There's the buy is Ulta, 690,000 shares. 690,000 shares of Ulta, $266 million position, dude. Holy freaking crap. Holy freaking crap. He buys Nike. I mean, Bill Ackman buys Nike and he buys Ulta. Is that insider trading? Well, look, I'm not going to accuse the Oracle of Omaha of insider trading, but I would imagine he knows something that not a lot of people know about Ulta Beauty for him to have this much confidence in this. The stock Ulta over the past 5 years is up. Dude, it's up 2% in 5 years. In 1 year, it's down 30%, which is a good thing. You want to be buying it while it's down. Year to date, it's down 32%. And over the past month, it's down 16%. Right now, it's up 10% after hours. Datarama. Thank you, Jubei. I appreciate that. Datarama. I forgot the name of that. This is the website for those that want to see like people that get upgraded immediately. So here's Warren Buffett. Bro, what is going on? Is this not crazy to everybody else? There it is, Ulta. He added another 300% to his position on Sirius XM. Apple, he reduced by 50%. We knew that already. Wait, so is Sirius up after hours? Siri, is that up after hours? That's up 4%. Yeah, that's up 4%. Holy freaking crap, bro. That is... I don't even know what to say to that, dude. I don't even know what like the Nike thing already. I didn't make sense of that. But what do you guys think, dude? That's Ulta Beauty, $250 million stake in makeup. What the hell is so important about Ulta Beauty, dude? Rather by Elf. I think Elf is not as attractive as Ulta from a fundamental standpoint. Elf is growing a lot more though. Robinhood, it's up. It's barely up after hours. It's not moving. Yeah, see, it's interesting because these metrics are kind of what the street cares about, but also we kind of knew these metrics already. Palantir is at $31 on the close. We kind of knew these metrics. I thought if they were more solidified in the algos, street would care, but street doesn't care too much about this. Must be a consumer staple. There's no way makeup is a consumer staple, right? Like, what is he thinking here? Ulta Beauty, bro. I've been in an Ulta store. I'm not saying Ulta doesn't have a moat or that makeup's not important or anything like that. Like, obviously, there's a massive market, $15 billion market cap. It's like, it's important. It's a price of sales of 1.3. The evaluation on a high level doesn't look crazy at a PE of 12. I really have never deep dug into their numbers, but especially if you bought it when it was even lower than it was right now back in April. But out of all the companies, out of PayPal that's buying back almost all of the free float, out of Verizon, out of Disney, which, you know, I don't love Disney, but it's definitely sold off aggressively, and Buffett's always loved Disney. He picks makeup. I don't know, dude. I can't believe it. Even if, you know, even if women love Ulta, which is fine, I'm just surprised he allocated to that. Okay, so we'll try to understand the Ulta stuff in a bit. If we're getting a recession, you would think makeup is not going to be top of mind for women, even though they spend a lot. Nike up 4%. That one makes more sense to me. I could see Nike recovering. That is a brand that's not going anywhere. I could give you the bull case, even though I'm not super bullish on it, but I could give you the bull case for Nike. But if consumer confidence is low, why would you expect people to buy sneakers that are overpriced, in my opinion, compared to the competition, and like sweaters with a swoosh logo on it that make people feel cool when in reality they're not that cool, right? Like that, like if the consumer sucks. So I think Buffett and Ackman are saying the consumer's not struggling to an extent with these purchases. I mean, I think they're kind of saying that they're not that that it's not that big of a deal. Why is Snowflake selling off after hours? I have no idea. Snowflake right here, down 1.76%. S&P at 543. Robinhood still zero move on Robinhood. Disney is flat, and then Palantir basically flat at 31. It's up a little bit, 31.03 after the bell. Cisco up 5.7%. Ulta now is up 11%. I don't get it, dude. I don't get it. I know it's a small position. I know 266 million is not a lot, but still, dude, when he takes a position like that, he's getting ready to add aggressively over time, at least. What else did he add? Chevron, he dropped 3%, added to oil, added to Chubb Limited. That was a secret stock for like 8 months. Amazon was the same. MasterCard was the same. He added again to Liberty Sirius XM, which is a holding company of Sirius. Dude, I don't know what that does. He like love listening to Howard Stern or something? Like what is so special about Sirius XM? Me and Steve looked at the balance sheet a while ago and we thought it was attractive, but we had no clue why Warren Buffett owns like 500 million shares of this stock. We just had no clue. But outside of that, he dumped Snow. Did he? Did he dump Snow? Oh, that's why Snow's down? I don't see it on Datarama. Maybe it must have been posted somewhere else. Maybe that's why Snowflake's down. He completely dumped out of Snowflake. Well, that was kind of obvious. I mean, he doesn't care about tech anyway, so there's no point he would keep that in the portfolio if it was underperforming. He sold off T-Mobile by 10% as well. Spotify's a free alternative to Sirius. Yeah, dude. I mean, like, there's so many alternatives for audio than Sirius XM. I think he's going for an acquisition play there, but like, I don't know, dude. I mean, there was one theory that Steve had that SpaceX was going to acquire SiriusXM. Steve with his, interesting takes, but he thought the satellite infrastructure that Sirius has, because they're still in like, I don't know, 50 to 100 million cars across the world. That is something SpaceX would utilize. I don't know if he's buying it for a SpaceX acquisition, but I don't know, dude. It's very interesting. Both Ackman and Chuck bought Brookfield. Yes. So Ackman did buy Brookfield. That one makes sense to me. That one is not that confusing. Let's see if CNBC is covering this at all. Let's see if they're talking about this at all. Dude, that is wild. By the way, gold is at all-time highs also. So you got Buffett buying makeup and gold is at all-time highs. And then you got Robinhood buying 20% month over month that's not moving after the bell. Like, what type of a close is this? This is so interesting, bro. This is so interesting. Let's see what people are saying underneath the Nike tweet that I put out. Let's get people's reactions to that. That is interesting. Nike, I understand that one a little bit better than Ulta. Someone said it's boring. On's better. Alibaba's next. I got Nike calls literally yesterday. Nike is too woke. Why does he buy woke company? Smart man. Okay, so we got 50-50. Some people say it's too woke. Some people say he's super smart for doing this. Wow, that is weird. That is weird. And again, I know it's a small part of his portfolio. It's always curious what he ends up doing. Amid Robinhood always moves and grinds higher slowly, never reacts immediately. Yeah, that's also very, very true, dude. After earnings, it took about 15 days for them to go from 16 to 20. So I think it's kind of a slow grind as well. Now there was a metric, it's up a little bit after hours. There was a month like 3 months ago where it went from like 16 to 19 on these metrics. That's the only reason I think the metrics are kind of important, because I've seen it move pretty intensely off these metrics. But then again, that's when we were in raging bull market. Now we're in bull market, but it's not raging bull market. And so that is where, you kind of have to readjust some of your targets and see how this plays out. I think after the rate cut, we will get a lot more clarity on if Robinhood is a $30 stock at the end of the year, or if it's going to be stuck in this $18 to $20 range. And that if you have leaps or options, you have to push them out to 2027 or 2026 versus 2025, which is, it's just the nature of the game. Sometimes you have to do that. The good thing is the fundamentals of the business are getting so good and the growth is so strong that if you have to wait another year, on your leaps and you can't get the 2025 exit you want, then you might just have to do that, right? Because the market conditions might have to change. But overall, these metrics not really moving the stock too much after the bell. Ulta is up 12%. Cisco is up 6%. Google up a little bit. Now, you would imagine Google would be down because Bill Ackman sold 28% of his Google. That's the thing we're not talking about. Because he sold a ton of Google. Let's go back to Ackman's portfolio. Why do you think he sold Google? Why do you think do you think he saw this DOJ thing coming? Or do you think he's just getting tired of Google? I mean, he got a pretty heavy position when it was at $90. Yeah, reduce 27%. No, basically 28%. 8.5, 19.5 together, 28% on Google. So now he has 11 million shares of Google. He has 3 million shares of Nike. He has 28 million shares of Chipotle and 8 million shares of Hilton. He sold a crap ton of Chipotle, which makes sense. Because, Chipotle in general, he's held that for a long time. But at the end of the day, he got rid of a ton of Google. Maybe he's mad at the wokeness. But why would he buy Nike? Don't people think of Nike as like a woke company? Oh, you mean Google. I don't know, dude. Honestly, Ackman's going down his like non-woke route if you keep up with his content. So maybe he got upset, but I don't think he's that emotional about it. I don't think he would care, dude. Like when I've heard him talk about Google, he's very belligerent that Google is going to be an AI leader. Maybe what my guess is he's starting to feel less confident Google's going to be an AI leader. That's my basic analysis on why he sold out of Google. I don't think it was the woke stuff. I think or maybe the woke internal politics is stopping Google from innovating as maybe like that's a reason. But at the end of the day, selling Google for Nike is super interesting, dude. And again, when a stock goes through Ackman's desk, he talked about this. It goes through months of due diligence. Like they really look at a company. Now, granted, they did that with Netflix and then they sold it a month later. So that gives you a little bit less confidence in terms of how much due diligence the team really does sometimes. But it looks like they spent a decent amount of time studying Nike to try to come to this conclusion. Nike right now, after the bell, is up 4.6% on this. Very, very interesting. Very interesting on selling Google, getting Nike. Now, if Buffett bought Nike, that would be really interesting if both of them went in on this one. All right, let's see if we can get some coverage on this as well and see what else is going on. Okay, here we go. We got Ulta. We got the Ulta coverage. Let's see what they're saying.
Report is out, and Contessa Brewer has the details. Contessa.
Hi, Morgan. Berkshire Hathaway disclosing the size now of its Apple stake at the end of the second quarter was 400 million shares. Of course, Berkshire announced recently that it had decreased its Apple holdings by 49% during the quarter. So now we know that it stands at 400 million shares. Okay, wait a minute. During the quarter, it also revealed small new stakes in cosmetics company Ulta and Heiko, which makes aircraft components. It increased its holdings in global insurance giant Chubb to 27 million shares, up about 1 million shares. Remember, that was revealed as Berkshire's mystery stock. And Berkshire decreased its stake in Capital One, in T-Mobile, in Floor & Decor, and Louisiana Pacific, a materials manufacturer, and entirely dissolved its stake in Snowflake, the AI cloud computing company. And Snowflake is off by more than 1% at this point, too. We'll keep watching those. Morgan?
All right, Contessa Brewer, thank you. Let's bring back Mike Santoli for reaction to this Berkshire filing. Mike, beauty is beautiful. Ulta,
Yeah.
it's been hit pretty hard, so it's interesting to see the pop here.
Yeah, beauty at a price is beautiful to Berkshire Hathaway is the way I would say it. This used to be, kind of a high momentum growth stock with a really demanding valuation, about 40 times earnings. Obviously, fallen on a couple of rough quarters, now under 13 times earnings. I think that's why you see the dramatic price reaction to that. Now, you have the standard disclaimers here. One, you don't know if it's Warren Buffett or the other investment managers at Berkshire who are doing the buying. It's a relatively small stake, as Contessa mentioned, and it can change at any time. But it is interesting because retail is not really an area where Berkshire Hathaway has done a whole lot over the years. I mentioned that the very small position in Floor & Decor was reduced. So, it seems like they weren't necessarily hunting for a specialty retailer because that's not their mode, but it came into the valuation zone, presumably.
And of course, Berkshire, whose bread and butter is insurance, perhaps not surprising to see that they have upped their stake in Chubb.
Yeah.
The Snowflake sellout is interesting as well. I mean, stock's down 1.5%, almost 2% right now. I realize that they have had this big position that they've been selling out of in Apple, but in general, I wouldn't necessarily historically think Berkshire and tech or software, et cetera.
Well, certainly also not necessarily, relatively early stage expensive software stock like Snowflake. It doesn't seem like, the kind of franchise that Berkshire would say, okay, this is going to be around for 50 years and we're going to, own it forever. So again, you never know if this was just sort of a tactical position that was put on somewhere in the portfolio. But yeah, that's the other one that seems like it was, an exit after a maybe half-hearted entry.
Gotcha. All right, Mike, thank you. Well, shifting gears, defense startup Anduril recently raising $1.5 billion in a Series F round, bringing the company's valuation to 14.
We'll actually take a look at that coverage on Anduril in a second. But yeah, guys, this is what we got after hours with a Nike up 4.7%. Again, if you're just joining, Bill Ackman sold 28% of Google, bought 3 million shares of Nike. Robinhood at 1871 after hours. Robinhood metrics, we'll go over those again, but pretty damn good metrics. Street not reacting too much. Google is flat after hours on the Bill Ackman sell. And then Ulta Beauty up 13% after Buffett takes a $250 million stake in the company. Look, I don't think you only need to buy tech, right? Like that's not the point I'm trying to make. And I know Buffett is not really a tech guy. I'm just confused at Ulta. That's the reason for my surprise. And obviously I have some research to do about Ulta if the, one of the greatest investors of all time thinks that there is an opportunity there. And as they said, maybe it's his team, maybe it's not specifically Ulta, but the Berkshire brand taking a stake in a company is something you pay attention to, right? You don't necessarily just like ignore that. So I'll do some deep diving tonight and I'll try to bring some financials on the market open tomorrow and see what the heck is going on with this. But long makeup is very interesting to me. Especially, everyone's like, oh, he's raising cash for a recession. Well, if you're raising cash for a recession, you don't go long makeup, I think. I feel like you just increase your insurance exposure or something, Ulta's a good defensive play. Okay, why do you keep saying, am I getting this wrong? Is Ulta a defensive play or not? I have no doubt about their products. I believe that Ulta is an amazing company. I think I've shopped at Ulta before. I think I got my sister like a Christmas present from Ulta. Like there's no doubt there. But in a recession, do women actually keep buying more makeup? Because I'm not a woman. So I would imagine I'm ignorant here. Yes, you do. Makeup goes up. Lipstick index. Is that's a theory? Lipstick index? I just Googled that. Lipstick index. Really? You guys think I'm wrong here? I mean, I'm probably wrong. I'm not a woman here. I didn't think women would buy makeup. Lipstick index is a term coined by Leonard I'm not saying that. Chairman of the board, Estee. Oh no, I know how to say Estee Lauder. Estee Lauder, because I used to get my mom the perfume. It's called Beautiful from Estee Lauder. So I know how to say that name now. Used to describe increased sales of cosmetics during the 2000s recession. Lauder made the claim that lipstick sales could be an economic indicator and that the purchase of cosmetics, lipstick in particular, tend to be inversely correlated to economic health. The speculation was that women substitute lipstick for more expensive purchases like dresses and shoes in times of economic distress. Is that real or is that bullshit, bro? Really in a recession, women choose to buy more lipstick and makeup over dresses and shoes. This is so interesting, though. I feel like this is bullshit, but then the data is telling me that it's not. Subsequent recessions, including the late 2000s recession, provided controverting evidence to whatever's claims. I'm tired of these words today, dude. As sales have fallen with reduced economic activity, conversely, lipstick sales have experienced growth during periods of increased economic activity. As a result, the lipstick index has been discredited as an economic indicator. Okay, so some studies say it's false. The increased sales of cosmetics in 2001 has been attributed to increased interest in celebrity design cosmetic brands, not the recession. I've got to do some more research, dude. It's not that convincing that really lipstick goes up. Lipstick is a defensive. Robinhood moving a little bit after hours now, about 0.54%, 1875. Where's ELF? ELF has to be up on this. There's no way ELF is down. How is ELF not moving, bro? This is wild, bro. You would think makeup catching a bid by one of the greatest investors ever would put other companies in the sector a little bit higher than what they are right now. Wow. ELF nothing on ELF. It's up barely after hours. This is incredible, dude. It's commentary on the socioeconomic status of alt consumer. Okay, so if you're a woman in the chat, can you confirm this for me? I know it's more guys, but if you're a woman in the chat, a girl in the chat, would you buy more makeup if you had your economic position start to deteriorate? Would you buy less like purses and buy more makeup? I need to poll this on Twitter, dude. I need to really ask. Like, this is incredible to me. This is absolutely okay. Steve called me 30 minutes ago. Let me see if he picks up the phone. Let's see if I can get his raw reaction. Let's see if he can pick up. Lena says yes. Okay, so we have one girl who says yes. Your call has been. Okay, Steve rejected my call immediately. He's probably in a meeting. Wow, dude, this is so interesting. Yes, to make you feel better. Chris can't talk right now. He's in North Carolina with his wife. He's not going to be able to talk right now. I don't know if it's about buying more. It's about maintaining the spend. Woman here would stay the same, so you would not buy makeup. Bro, you don't have to be a woman to know. We have wives, girlfriends, daughters. We know because our credit card statements show. So you're telling me your wife or girlfriend spends more of your money on makeup in a recession? Dude, it's the first time I've heard the lipstick index, dude. What the fuck is this? This is ridiculous. This is insane. A lot of you are saying yes. Dude, maybe I haven't had a girlfriend in a while, which is why I don't relate to any of this shit, but I just this is crazy to me. Lipstick index. I guess it's a defensive, dude. Who am I to argue with Buffett and with all of you in the chat? I guess it is what it is. I guess Bill Ackman's thinking of Nike as a defensive as well. Interestingly enough, they didn't buy McDonald's. I thought they would get into that trade if they think a recession's coming up. RKT mortgage company Meet Kevin bought this one today. That one was up 2%. That's up 33% for the year. Snowflake down 1.5%. Buffett's out of Snowflake. Robinhood moving a little bit more after hours, and now Google is basically flat. Could this play in effect with Honest? Honest doesn't sell makeup though, right? They sell biodegradable diapers. Or does Honest sell some type of makeup that's like also healthy for the environment or something? Oh yeah, they do. No, they do. They definitely sell makeup stuff. I don't know if this is a thesis for Honest or anything, but I think Ulta is like a totally different company though. So when I did have a girlfriend, I bought her Fenty Beauty. That's what I bought her. I think I went to Sephora. It's Rihanna's brand. I bought her Fenty Beauty. This was back in 2018-ish for Christmas. I remember that. Or it was her birthday. It was one of those events. So I remember shopping for makeup. I don't know why I was paying like $60 for a foundation, like whatever the hell that is. Foundation. Foundation, dude. Like the foundation of us should be our relationship, right? We should have a foundational relationship. I don't know why they need foundation for their face. This like weird shit. Robinhood 1880 right now. But that is my extent with really buying makeup and for my sister. But outside of that, I don't know shit about makeup, dude. Cisco earnings. Yeah, we looked at Cisco earnings. We looked at Cisco. It was good. It was good. I'll pull up their actual results on their website, but top line. The thing about Cisco, dude, is I don't know why it's that exciting. Cisco is Cisco. It's not going to move like 10, 15% tomorrow. They give a dividend. They've been at the same level they've been at for 5 years. You get the dividend. They bought Splunk for $28 billion. They're not going to, do some huge acquisition. If they do, that's not going to help shareholders because it's not like that's going to increase the stock. So Cisco's a relatively boring company. It's good that they put up numbers, but it's not like, from a stock perspective, it's not going to move that dramatically. Ask JD Vance about makeup. Oh my gosh. Especially with the holidays coming up, perfect time to rack up. Every woman knows. This is interesting, bro. This is interesting. Druckenmiller sells Nvidia and buys Wolf. Oh, Druckenmiller's thing is out? Hold on. Let me see if Druckenmiller's thing is out. Druckenmiller is out. We got to see that. Is it out? It's not on my website. Sam, if you have the link, can you put it in the chat? I don't think it's updated on Datarama yet. If you have Druckenmiller, please send it to me. I am curious about that one. Nvidia for Wolf. Someone texted me about Wolf this morning, bro. That's so interesting that he bought Wolf. Hold on. Wolf is the Bitcoin miner? There's no way, dude. What is going on today? There is no way he bought Wolf. There's no way. No freaking way, dude. Druckenmiller. No, you're right. He bought Wolf. Okay, I got something. He bought 2 million shares. All right, you're saying he bought Grindr. Don't play with my emotions in the chat. Please do not do that. He bought 2 million shares of Wolf. He bought 36,000 shares of Mercado Libre. He didn't increase Palantir. He closed Marvell. He decreased Nvidia. Damn, he sold a crap ton of Nvidia, dude. He sold, hold on, let me do the math. 1.76 minus 0.21. He sold 1.55 million shares of Nvidia. And then on Microsoft, he sold 1.11 minus 0.4. He sold 710,000 shares of Microsoft. Yeah, Kevin Smith. Kevin, you're the one who sent me Wolf. No, that's right. So Kevin, you sent me a DM of WOLF, not WULF. Sorry about that. But yes, I remember seeing Wolf today somewhere. And I was like, what? Is this the same Wolf? Wow, dude. He bought a Bitcoin miner and he didn't buy more Palantir. I thought he would buy a little bit more Palantir. So he didn't sell any Palantir. He also bought Adobe. That's fair. He didn't close the IWM call. He has $500 million on small caps. I don't think we have any updates on that yet. Sells Nvidia, sells Microsoft, buys a Bitcoin miner, and then buys Adobe. It is Wolf right there. This net position in Wolf, WULF. It is, Wolf is up 5% after hours, by the way. Wolf is up 5% after hours on this. Are we really moving away from semiconductors to lipsticks and diapers, dude? What is going on, dude? I thought the only important news today would be Robinhood earnings, but apparently all these big hedge fund institutional investor guys are just buying a lot of stuff that I don't think anyone expected them to buy. Victoria's Secret is up 16%. Hold on, bro. VSCO. Does anyone own this? Well, they were up 16% the whole day. Did anyone know they were not after hours, but did anyone know Victoria's Secret was up 16% today? Because I didn't know that. I just see the tweet right now. They've hired a new CEO. What? What is this whole trend with CEOs, dude? What is going on? They hire a new CEO and they go up 16%. Victoria's Secret up. It's $1 billion market cap. These are 13F filings, correct? These are 13F filings. It's Long Woman Day. Yeah, Victoria's Secret makeup, dude. Cisco is down both in the 1 year and the 5 year. Yeah, that's why Cisco is just not that exciting to me. But, obviously a very good company and the dividend is great, but it's just like from a, an earnings perspective, it's not going to move that crazy after earnings. Dude, what is this going on? Clove is up 25%. Wait, isn't Clove that Chamath scam? Am I not wrong? Clove is the Chamath SPAC scam. Why do we still care about that? That's up 25%. Is there a reason to even get it? Insiders are buying? This is the right one, right? Clover Health. This is the Chamath one. This has to be. I didn't even know this was still public. Yeah, this is the Chamath one. Yep, 2021, $30. Dude, my grandpa lost like 40 grand on this one. It was so, I think I told you guys the story, but one day he was watching CNBC in 2021. Chamath came on CNBC. He was talking up Clover. And my grandpa, 80 years old, he doesn't know. He's like, fuck it. He sees another Indian on the screen or Sri Lankan, whatever, Chamath is. And he was like, all right, fuck it. He sees a brown guy. He's like, all right, I'll buy Clover. And then he lost 90% of his money. So interesting. Does anyone own Clover in the chat? Does anyone still have any faith in this one? Up 25% today. Volume was 26 million. Robinhood, 1877 after the bell. Palantir, $30.98. That's down a little bit. Google down a little bit. QQQ up a little bit after the bell. That is so interesting. That is so interesting, dude. Victoria's Secret, Ulta, and Nike are the leaders today. Kamala's going to win the presidency. That's why you have to buy Victoria's Secret. That's crazy, dude. That's crazy. All right, let's get that update on Anduril, and then we'll keep going from there. This is wild, bro. What a wild closing.
$13 billion. Part of the funding will go towards its manufacturing platform, Arsenal, that will power a new 5 million square foot factory called Arsenal One, capable of producing tens of thousands of autonomous military systems per year. Joining me here in a first on CNBC interview, Anduril co-founder and executive chairman Trey Stevens. He's also a partner at Founders Fund. And Trey, it's good to have you on set. Welcome.
Thanks, Morgan. Good to be here.
All right, congratulations on the round, on the raise, I should say. 5 million square feet. That's big.
It's really big. It's a lot of square feet.
Okay. How does this build out happen? What does it mean in terms of production? How quickly you can bring that online?
Well, I think one of the things that oftentimes...
By the way, Palantir is one of the hardware defense contractors that works with Palantir on a lot of software stuff as well. So they both did the Titan contract. So there's a lot of correlations with Palantir.
As people miss is that you don't go to war with the things that you're developing. You go to war with what you have today. And, we are in this place where our entire weapons inventory needs to have literally another zero at the end of it. And maybe we're okay on day 0. Maybe we're kind of stretching our limits on day 30, but we're definitely nowhere near having the equipment that we need if we were to be in a conflict in day 300. And that's really what we're trying to solve with Arsenal One.
Okay. How quickly does it happen?
I mean, this will be a staged process in the next couple of years. We have to identify a site, work out the arrangements with the state that we're going into. And that will be a process that we'll be figuring out in the next couple of months. And then as far as build out and things like that, obviously it depends on the site and how ready it is to scale. But I would imagine that in the next couple of years, we'll be into those first couple of million of square feet producing.
Yeah. I mean, it does cast a light on something I've been covering for the better part, I would say 3 years, with the publicly traded, more traditional defense prime companies, which is supply chain and the defense industrial base and how brittle it has been. So what's so fascinating to me about Anduril is that software company within hardware. You're doing both, and you sort of have a different business model in terms of how you approach development and then selling those products to DoD and elsewhere.
That's right. The traditional defense industry is built around exquisite systems. They're building multi-$100-million fighter planes, bombers, multi-billion-dollar aircraft carriers. These are low-volume systems that are incredibly complicated, that are very, very inflexible in our supply chain to be able to shift from making, a Stinger missile to making a Patriot to making, a fighter plane. And our goal at Anduril is to really focus on how can we build a software-defined architecture in manufacturing as well as in our products so that we can move really quickly to change course when we need to change course to be able to manufacture in a modular sense rather than getting stuck in these exquisite kind of pipelines.
It sort of reminds me a little bit of the Tesla model in terms of software taking a bigger role on the factory floor. I was speaking to General Jay Raymond, retired now, but the first ever chief of the U.S. Space Force, about how the business model is changing. And we were specifically talking about space, but how it's changing, how the rise of commercial space is enabling the government to think about risk differently, and using the example of the shift away from very expensive so-called exquisite satellites that take many years to build, there's one-offs, to partnering more with commercial space companies for faster, cheaper, more proliferated spacecraft that can be launched more quickly to orbit. I want to play the soundbite for you about how he's thinking about this business model and what it means.
If you have a different model that has satellites coming off of an assembly line, you might be able to take a little bit more risk. One, because the numbers are greater. Two, if something fails, another one's coming off the assembly line right behind it. And three, it doesn't cost, you're not breaking the national treasury. And so this new business model that started out, first with our missile warning, missile tracking redesign, will now progress into other capabilities as well. And I think that's a significant opportunity for commercial industry.
You're interacting with the DoD on a daily basis. Are you seeing that shift?
Yeah, I mean, I think what General Raymond is describing is perfectly analogous to what we're working on at Anduril, and it is a cultural shift that is beginning to happen in the department. You see things like the Replicator Initiative that has been spearheaded by Deputy Secretary Hicks, and that's really what we're leaning into at Anduril, is how do you produce these high volume, much less expensive systems where you can afford to take risk and iterate much more quickly than you would in a multi-decade weapons platform.
All right, Trey Stevens, thank you so much for joining me here on set.
Thanks.
There's always so much to talk to you about, so come back.
Anduril is going to be an awesome company. I have a friend who got a job at Anduril 2 months ago, and the interview process was pretty ruthless, but he got in, and he got a pretty sweet deal. And if Anduril goes public, I think he's going to make a lot of money. So very interesting company. Software, hardware mix of defense contractor, former Palantir employees founded the company or C-suites at the company. And probably bullish in general that they're getting more government contracts because it means the government is ready to spend more on defense. They're convincing the government they need to spend more on defense. Palmer Luckey, absolute rock star, and more money will be going to defense in general, which means Palantir should be able to get a benefit off that. Anduril is not public; they are private. If you want to get Anduril, you've got to find someone to get you exposure to it. I don't even think they're in any of the startup ETFs. They're probably shares are probably sold on the secondary market, but they're going for a premium because Anduril is going to be one of those companies, I think, that's as expensive as Palantir when it goes public. Like, I think Anduril is going to be... Now, I don't know if they're going to ever have a real commercial business because they're so built into defense, but they might be the modern Lockheed Martin when they go public, just way better. But I don't know if they're ever really going to go commercial, which is why their TAM might end up being limited. I don't have a stake in Anduril, for anyone wondering, so I don't own any of Anduril. Yeah, Ginkgo Bioworks today was down 20%. I think they're doing their reverse split today. I've been through a reverse split. It's not fun. I bought a biotech when I was very new to the market back in 2019. I had no idea what I was doing. I saw somewhere that they're going to cure cancer. I was like, great, I should own 3,000 shares of this. Like, it's just the stupidest shit, right? Like, I think everyone has to go through that phase. Like, you just have to. You kind of have to go. Just like the guy who bought $800,000 worth of Intel at $30. You know, my loss was more like 10 grand. His loss was, now he's down 170 grand or whatever. So, and I think Intel will recover. My biotech probably is never going to recover. But Ginkgo, a reverse split is not fun because I remember one day, like when it reverse splits, it's bad, right? When it splits forward, it's good. When it reverse splits, it's bad. Usually you have to do it because of a listing requirement. Ginkgo has been under $1 for about 2 months now. If you look at this stock chart, just disgusting, dude. And I don't feel that bad for Ginkgo because the insiders sold out a lot. It was at $15 in 2021. Now it's at 23 cents. Kathy, unfortunately, took a gigantic L on this. I mean, Kathy Wood owned almost 300 million shares of this company, basically gone to zero. And so the insiders sold a lot. So I think they made their money, but shareholders, investors ended up getting screwed. So reverse splits are not fun. They're probably going to still be able to be listed, but not fun when a reverse split ends up happening, and it sucks. And as a shareholder, the only thing you can learn from it is a lesson. Like the reason I was interested in Ginkgo when it was $2, and then I exited after like a month of holding it. If you guys were part of the channel back in October of 2022, and I think I made like $100. I had like maybe 1,000 shares, and the reason I exited was because I was like, dude, the CEO, the insiders keep selling, and they were selling so much. Like, I can handle insider selling. I'm not like scared of insider selling. Like, that's part of the game, but it was like egregious, dude. It was just like, okay, this feels like open door type of insider selling, which if you saw open door back in 2022, the insiders were just getting the hell out of the company. So that's what did it for me. And then I realized their COVID biosecurity revenue, it went down the drain. Their growth is not there. I mean, the CEO, Jason Kelly, I like him. He's a slick talker, but he's not enough to get the company to grow. At the end, this goes to show you, like, people say, oh, Karp knows how to talk so he can convince people. Yeah, but the numbers have to prove it. Jason Kelly knows how to talk, dude. He's one of the best talkers out there, but the numbers suck. And so if the numbers suck, at the end of the day, the street's not going to buy your product. So it makes sense that Ginkgo is struggling, and we'll see what ends up happening with them. Down 13.85%. Now, Shyam Sankar is on the board of Ginkgo, who's the CTO of Palantir, which doesn't really look the best for Shyam, given he's associated with this company. Not saying the company's a fraud, but just saying the company probably never needed to go public. It's like Bumble. There's no reason for this thing to be public. They just didn't need to be in the public markets. And I think that's the realization on that. Elf is up 0.39%. Snowflake down 1%. Nike still up 5%. Ulta Beauty is still up 13%, 12.3% on the day. Wow. How much is Karp sold? I don't know the exact amount, but I know Karp still owns about 48 million shares, and Peter Thiel owns like 140 million shares, 120 million shares. So they both own, I think, 5 and 6% of the company. And again, they've been at the company for 20 years. There's a difference, right? And like, when you're a company doing a couple billion in revenue and you've been there for 20 years, I get it. Ginkgo guys, dude, like they didn't do anything. They just came out of, Silicon Valley and IPO to biotech when it was the hottest time in the market to IPO. And then they started selling. So I think it's definitely a little bit of a different situation, but it is tough when you're part of a company and they go through a reverse split. Yeah, Robinhood's still not moving. So we're going to watch the Vlad podcast in a little bit, but we have a lot of news after hours. Robinhood is up. It's up 1% after hours. Nothing too crazy. Guess the market is digesting a lot of other stuff. Would you buy Anduril IPO? I don't know, dude. I think if I believe in like Western values and like defense tech, I'd probably have a small allocation to it. But and again, I could be so wrong here because I just don't understand the company that well. But I don't know what's the TAM overall. Like, Palantir has a multi-trillion-dollar TAM. Like, healthcare alone is a multi-trillion-dollar market, right? And that's just one sector they're attacking. Anduril's selling to governments, which is a good business, but it's not like they're not going to BP one day and selling drones. Maybe they will one day. So I don't know what the commercial bull case is on Anduril. But if you just believe in like going long the West, and if you think they're going to be more geopolitically unstable, then yeah, that could be the argument for going long something like Anduril. Buffett should have bought Palantir Tesla. Okay, so I didn't have that high of an expectation on a buy. I just didn't get Ulta, dude. I didn't. But apparently the lipstick index is real. And I learned about it today. I'm learning a lot of things today. And women buy more makeup when we have a recession. So TeraWulf, by the way, up 12%. I don't know why Stanley Druckenmiller bought 12% or bought 2 million shares of TeraWulf. Like, does he even care about Bitcoin? Because you're buying this for the Bitcoin, right? I mean, I know they have some energy contracts. Is there a hidden energy play in Wolf that's not about Bitcoin? It's got to be something that he's seeing that's interesting. Saudi Arabia Public Investment Fund files Q2. Okay, so they bought 25% more Uber, Lucid, EA, and Take-Two. It's kind of boring. Not that interesting. It's interesting. I mean, like, Lucid and Uber, dude. Lucid, I think that's just stupid. And Uber, it's weird to be that long Uber given the robotaxi stuff that might come out. All right, Steve's calling me. Let's see if he even heard the news. Steve.
What's up?
So I'm live on the market close. I wanted to tell you something, and I'll call you later to get the full DD around the new thing you're looking at.
Okay, what did you want to tell me?
So I know you've been in meetings, so I have to drop a lot of news on you. I just want your raw reactions, okay?
Well, since I have no freaking idea what you're about to say, it's going to be a raw reaction.
Okay, so raw reaction number one. I'm going to say it, and then I want your 2 to 3 minute take. Warren Buffett buys $260 million of Ulta Beauty.
I think it's a smart play.
Why?
I don't know. I haven't looked at the financials or anything, but it's a sector that's never going away. You have a growing population, and placed on Instagram.
Wait, hold on. Sorry. Dude, how did the phone fall just like that, dude? Hold on, let me call him back.
Man, look at you.
Sorry.
Fumbling.
Sorry. The phone fell.
Fumbling. I thought you were running a professional outfit over there.
I'm sorry, dude. Okay, go ahead. It's a growing population. Go ahead.
Yeah, I mean, I got to look at the financials, but the premise would make sense to me. It's a growing population, growing emphasis on trying to look better on social media for male and female. I think it's an interesting play. It's a space that's only gotten bigger as time has progressed. So I got to look at the financials, but the premise makes sense.
But makeup, Steve?
Yeah, have you seen how much makeup gets sold?
Okay, so do you know what the lipstick index is?
I have no idea what the lipstick index is. What is it?
So I found out about this today. I'm sure you probably heard about this, but apparently,
What is it, like ELF, Ulta?
No. It's not an ETF. It's a theory. It's Estee Lauder came up with this concept that when you have a recession, women buy more makeup instead of buying bags and like dresses. And
yeah, because it's less expensive. Yeah, it makes sense.
Right. So there's some economic data in 2001 and stuff showing that like Ulta is a defensive, is basically what I'm trying to say. Defensive stock.
I don't know if you can really classify as defensive. I think it's a well-rounded industry that's never going out of style because there's such an emphasis on style these days, even more than back in the day. So I think it's interesting. I mean, at one point I had purchased Cody because of the whole Kylie Jenner thing and did it as a short-term play. So, I mean, it's interesting to me.
Dude, I'm definitely bullish makeup. When I think of a recession, I think the first thing you do is you don't buy makeup, but apparently
no. Everybody wants to look their best. No, absolutely not.
Interesting. All right, so that's the first piece of news. All right, second thing of news. This one's gonna be easy. He sold out of all of his Snowflake.
Who?
Buffett.
Okay, that's not surprising, but okay.
Okay. Then Bill Ackman. Two things. I'll tell you the first.
Oh, wait. I think I know the first. I know at least one of the things you're going to say about Ackman. He's no longer taking whatever the fund's name, Pershing Square.
No. That's
Fund Public.
Steve. This is the media business. That was last week's news. Okay. We've got fresh news today.
I was upset about that because I would have invested in Pershing Square.
Of course you would have invested in Pershing Square. Dude. You love these guys. You love these hedge funds.
Bill Ackman.
Yeah, I know. You love him. You love Ackman.
Baby Buffett.
No, he's going to use you as exit liquidity, but you love to be exit liquidity for
Baby Buffett.
Okay, so Baby Buffett today sold 28% of his Google stake.
Yeah, he's probably worried about the whole antitrust thing.
That's it? That's the only reason you think he sold 28% of Google?
I mean, I don't know. I haven't been keeping up with the news today. I've been swamped. But
No, but not today, as in Q2. Like the filings are out, so it's not literally today.
The freaking numbers were amazing for Q2.
No. What I'm saying is Bill Ackman reduced his stake over the second quarter. Like it wasn't literally today. He sold 28% of Google.
I get that, but look, he's owned it for quite a long time. He's probably up quite a bit on it, and he's
only owned it for 2 years. It's only been 2022. What do you mean long time? How's Baby Buffett selling after 2 years?
What was the price 2 years ago?
He bought it at like $95. That was his average.
All right, so what's he up? 70%?
Yeah, but doesn't he go long? He's sat with Chipotle for a decade, Like
okay, but maybe he sees another opportunity.
Okay, well, you're right about that. So, what stock do you think he bought 3 million shares of? I'm gonna give you three guesses.
All right, give me a multiple choice question, please.
Okay, cool. All right, so here we go. Four options. Okay.
Okay.
Disney, PayPal, Nike, Starbucks. Take a second. Don't say it immediately. Take a second.
So
take a second.
I don't even need to take a second. I would say Nike because I just feel like he's a big brand guy and he probably doesn't need another food company because he already has Chipotle, so he doesn't need Starbucks. And I don't know that Disney's Disney. I could see Nike.
Steve, you just sounded pretty smart in front of 1,200 people. I'm not gonna lie, you are right. It is Nike. He bought 3 million shares of Nike. So, what do you think? 3 million shares of Nike, dude. Is that a good one?
I don't know. I've never liked Nike as an investable business for me, so I don't know. He must see something that I don't. There's things with Nike I don't like. So,
but would you sell Google for Nike? Like
me? No, not a chance.
So why is Baby Buffett doing this, dude?
You see something I don't see. I also don't follow Nike closely enough, so the things may have gone better over there. But I think that apparel is very difficult with so many. The thing with apparel, put sneakers aside for a moment, the amount of clothing brands, independent small clothing brands that catch fire is a problem for Nike apparel. So it's just it's something that isn't interesting for me.
Okay, and I've got one more for you, and then I'll get you out of here. I'll call you later so we can talk about that new stock, and then maybe on Friday if you're ready to share, we can share it on the market close if you want. Okay, so Stanley Druckenmiller. Yeah, I'll tell you what he sold first, and then what he bought. So he sold about 1 million shares of Nvidia.
Okay.
And about 700,000 shares of Microsoft.
Okay.
Any thoughts on that first?
What did he buy?
He bought 30,000 shares of Adobe, 36,000 shares of Mercado Libre, and then 2 million shares in a Bitcoin miner, TerraWolf. Yeah, I was speechless too. I was pretty confused at this. Like,
you know how I feel about the whole Bitcoin mining thing.
I mean, I just don't know, like Bitcoin mining really is that? That's confusing to me. You would think he made MicroStrategy, you know, if he really wanted exposure, but he went the Bitcoin miner route and then he sold Nvidia and Microsoft. I mean, that seems obvious given a lot of people are reducing tech exposure, but he sold a lot.
People are reducing tech exposure, but I don't necessarily think that's a good idea.
So you're saying Druckenmiller's wrong?
I'm not saying Druckenmiller's wrong. He's one of the smartest guys out there. But what I'm saying is, I don't know that reducing tech exposure is the best idea for the next 5 years. How long have people been saying tech is overvalued? People have been saying tech is overvalued since it rebounded from the dot-com crash.
Steve,
and it just keeps.
He went from 1.7 million shares of Nvidia to 210,000. He sold like 80% of the position.
Well, I will absolutely say that I think the whole case for Nvidia, with what I shared with you last night, anybody who is selling isn't reading what I'm reading. Because if you think about what the second and third derivatives are saying of the AI boom from utilities and energy companies, and I didn't even send you what was said on the Chevron and Exxon call, but when you look at what the upstream producers are projecting their output is going to be over the next couple of years, and then you look at what I sent you from the conference call from Southern Company, and then you start looking at transport volumes from the big pipeline companies, I gotta tell you, the amount of data centers that are coming online that are entering in electric contracts and what these companies are spending on CapEx makes me believe that there's another at least 2 to 3 years of runway with NVIDIA. And I didn't think there was going to be that much runway, but after what Southern Company said, I'm really thinking that this has still got a long way to go.
You know that Eric Schmidt, the former CEO of Google today, basically said to buy NVIDIA at a Stanford conversation. He said
I'm in that camp and I'm cheap and I am in that camp.
Yeah, he said I'm not a financial advisor, but if I was in the stock market, XYZ, blah, 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 NVIDIA, right? That's what he said.
Yeah, I mean, I'm looking at it from a different angle than other people, and I'm just thinking, okay, if the utility companies are saying that most of what they are bringing on in the pipeline is going to be dedicated toward data centers, and that's where they're seeing the contracts come from, and then you look at all the CapEx that's being spent by these companies and saying that they are going to continue spending for X amount of time, 1 + 1 has to equal 2 at some point. And when we look at where the spend is going for this infrastructure build out, it's GPUs and server chips. And on the GPU side, there's only one game in town. It's NVIDIA for this build out. And then on the server side, gotta think that's going to favor Intel. So I think Intel is an interesting opportunity for long-term investors at the moment. I think that NVIDIA can really go higher.
Do you care that Cisco is up 5% on earnings right now?
I haven't even read it. I haven't seen it. Cisco is near and dear to my heart. I think it's so undervalued, but the market doesn't seem to care what I think.
Yeah, I didn't think you would care that much. I mean, you own it, but it's not like, it's not a big mover on earnings. So
I mean, whether it's 55 or 45, I don't care. Talk to me when it's 60 at some point. I mean, like this thing should be at least 60, 65. The amount of money that they generate, the amount of money that they buy back shares with and what they allocate to the dividend and just the sheer growth over time, and their fundamentals are so strong that it doesn't deserve the trade here.
Gotcha. All right. Well, yeah, that was the big news. Buffett buys Ulta, Bill Ackman buys Nike, and Druckenmiller buys a Bitcoin miner.
But that's a Buffett wheelhouse stock. Think about Buffett.
I don't get it, dude. I don't get it.
No, but so have you gone through his annual report ever?
Yeah, I've been through the report.
Okay. So when you look at those last pages about all the private companies he holds,
Yes.
not the publicly traded equities he owns, but the private companies. That's like 76 or 78 private companies, something like that.
Yeah.
They're freaking boring companies. Dairy Queen, See's Candy. I mean, you start looking at this stuff. It's either Hanes or Fruit of the Loom he owns. There is a lot of boring companies. Ulta Beauty fits right in with his mindset.
Oh, that's fair. That's a good
completely
point.
See that.
That's a good point. That is fair.
Completely see that.
And it's a very small position.
I think he's got a furniture company in there. I mean, don't forget, Berkshire was the textile company when it started. So you look at what he owns outside of insurance and energy, Ulta kind of fits in that wheelhouse.
That is fair, and I definitely agree about the private company analogy. I personally thought during a recession, women don't buy makeup. Apparently, I'm dead wrong about that.
Yeah, I think you're completely wrong about that.
Okay, real quick before you go, I just got Bill Gates's 13F. He sold 4% of Microsoft.
Okay.
And the only other thing he did is added 42% to Berkshire Hathaway.
Okay.
Dude, him and Buffett and Gates are like two peas in a pod, dude. Like they they are. I mean, the rest of his portfolio is Kraft Heinz, Coca-Cola. Like he's a little baby Buffett as well. He doesn't take too much risk.
You see Coca-Cola upper 60s.
Yeah. Oh, he has
a lot of stuff that I've been saying that's gone up.
Oh, by the way, what's his name? Gates has 800,000 shares of UPS.
Ooh.
That's one we got to look at. For those that don't know, what's his name? Steve is
actively investigating.
Oh, you actively investigated? I thought you were.
I'm not buying yet. I'm actively investigating. I haven't finished reading the 10K yet.
Okay, yeah, I thought you were just looking at it. So, all right, so you already started.
No, like I actually do read the 10Ks, and they take a little bit of time. So with everything else I'm doing, I'm not able to crush it as quickly as I'd like to. But it's interesting.
All right, interesting. So we'll have a lot to talk about on Friday.
What I did today?
What?
Know what I did today?
What?
When I went to go pick up lunch, I walked around a couple of extra blocks, and I was looking to see how many Amazon trucks versus FedEx and UPS trucks I saw in the city. I'm
assuming you saw more UPS?
I saw more Amazon trucks than anything.
Oh, that's what I meant. Yeah.
Yes.
Oh, yeah, 100%. 100%. Yeah.
100%. But I did see a bunch of UPS trucks and FedEx trucks. I'm going to do a little bit of a different type of due diligence this time around, besides just financials. I think I'm going to look at where the majority of the UPS locations are and see how densely populated those areas are. And I'm going to try to figure that out if I can crack it. But UPS is looking really interesting right now.
UPS is down 20%, FedEx up 12% this year.
Yeah, the divergence between the two is interesting. I got to figure that piece out too. But if UPS is going to pay me 5.2% to be a shareholder, if I think it can turn around, that's interesting.
Yeah. I mean, your name is Dividend Streams. So I see the
But
attraction.
it could be an Intel that completely wipes out the dividend also. I'm not saying that's going to happen. It doesn't look like it's going to happen. It looks like their cash flow is very strong and they can support the dividend and continue to grow it. So,
and the thing about Ulta Beauty and the private companies, like the candy companies that Buffett always has in the
See's
Candy in the shareholder meetings, like him and Munger used to eat them and in front of everyone, and like those are
delicious. Let me just tell you,
I've never had them. I've never had them.
Delicious.
Yeah, I've never had them. I've never had that type of candy. But yes, that is something that consumers are probably going to engage with forever. I just had no idea that during a recession, women tend to buy more makeup. And maybe if he thinks we're getting into a little bit of a more volatile time, not maybe a full recession, but you're going to see an uptick in makeup sales.
I mean, I would go a step further with it and say there's more face-to-face interaction today than 10 years ago or 20 years ago, because you have to take into consideration virtual interaction is face-to-face interaction these days. So when you think about how many meetings there are and everything else, I just don't see the beauty industry going on a decline in the face of a recession. I really don't. I think it's part of your wardrobe at this point.
Yeah, you know, and this is about learning and growing as an investor, because my first assumption was the opposite of yours, and so this is what happens as you.
Now, I haven't looked at the financials. The financials may not make sense to me, but I think that it's interesting. And look, as guys age, I don't know. Who knows? Maybe people want to get rid of wrinkles. I don't know. Because they don't just sell makeup; they sell different types of creams and moisturizers and that type of stuff. You got to think there's been a whole revitalization of the whole skincare industry. So that's something else to keep in mind.
Yeah. All right, we'll have a lot to talk about on Friday, and I'll talk to you then on the market close, and we'll go from there.
Well, we got two things. Palantir.
Yeah, $31.
It's exploding.
Yep.
Gotta love it.
Yep.
Gotta love it.
Yep.
And a little company called Fortinet.
Dude, I forgot to ask, so I'll save that for Friday. I forgot to ask you last week, but Fortinet today up another 1%. Yeah, they've done well. They've done very well.
They're if you look at the quarter, they had an amazing quarter, and my call options may get called away because I don't know if I'm going to roll them or not. I am at the point where, even though I think Fortinet can run because I still think it's undervalued, I may want more NVIDIA going into earnings, and instead of tapping cash, I may just let Fortinet get called away and roll that into NVIDIA. And I'm even thinking about buying back my PayPal contracts and throwing that into NVIDIA to heading into earnings.
Dude, you're getting bullish NVIDIA. I feel it.
I am not getting bullish. I'm getting very bullish NVIDIA because the stuff that I am reading is so compelling. Now, keep in mind, if NVIDIA misses somehow, the stock's going down 40% the next day, in my opinion. Like, this is a company that's priced for perfection. It cannot miss, because if it misses, all hell is breaking loose in the share price.
Well, the whole market, forget NVIDIA too. Like that, everything's dead if that one takes.
But I think that if they are truly as strong as what it looks like they are, this is going to be incredibly interesting, especially with the Blackwell chip release that's coming up later this year.
Yeah.
So this is and Intel. Look, I'm building a position in Intel. I think Intel's a long-term winner.
Okay, save it for Friday. I'll ask you a lot of these questions on Friday. We'll talk about Google on Friday. There's DOJ stuff. We'll talk about all that stuff on Friday.
Yeah, the DOJ stuff.
I know you think it's stupid. It's ridiculous.
Well, let me just say one thing about the DOJ stuff. Okay, do we want America to be a superpower in technology or not? Because if the answer is yes, the DOJ should stop going after Alphabet, Amazon, and Meta.
I agree.
And Microsoft.
I agree.
Because you know what? The Chinese and other countries aren't going after their big tech companies in this fashion. And right now is an arms race for who has a superior tech. We shouldn't handcuff these companies. And they didn't become a monopoly intentionally. And I don't know that they are a monopoly. So I'll argue that whole Amazon thing every which day is Sunday, because I can cite a ton of competition in every space that they compete in. Alphabet's a little more difficult because of search, but at the same time, they didn't set out to be a monopoly, and they didn't buy companies to put them out of business. So I don't know. It's something that Alphabet needs all those components together to advance its technology, which will make America stronger. And look, I'm pro-American, so I want us to have the best technology companies.
Okay, last quick thing. Give me your 30-second take. I didn't tell you Michael Burry bought 24% more of
Alibaba?
Alibaba. That's correct.
Love it. Love it.
Yeah.
Most undervalued company, in my opinion, in the market. Only problem is it's a Chinese company.
All right. We'll talk
Have
on
you read
Friday.
their balance sheet?
No. Yeah. They have, there's like a, 180 billion market cap with 100 billion in cash or something. It's insane.
I think it's something like 160 billion in cash with 190 billion market cap or something like that. It's silly.
It's insane.
And the amount of money that they generate in revenue and then operating income and free cash flow. I mean, you're basically getting the business for almost free because you're just buying cash on a balance sheet.
I agree.
It's unbelievable. And they're the biggest cloud player in China. And you got to think that they're going to be the number one player in China. And it's only going to expand.
I agree with all that. You just have to be long China to be long Baba. And you have to give yourself a decade, I would imagine, for China to reclaim their economic prowess.
I don't know if it's going to take a decade, but you got to give it at least 3 to 5 years.
Agreed.
This is not an overnight play. But largest population, they want nothing more than to dethrone the U.S. as the largest GDP in the world. And that's their main goal. So as more people come into the middle class in China and increase their economic status, you're probably going to see more businesses get built and more need for cloud and more need for Baba's other businesses. I just think it's a misunderstood company. I think the fear is really with China, not the business, and the fear that the numbers aren't legit. But, I mean, there's a lot of risk, but this is a stock that should be nowhere near this price. I think it's a $250 stock. But I've been wrong. I mean, I bought my first shares at like $220.
Yeah.
I think my average price is around 95 or 105, something like that now, because I've been buying it the whole way down. But I've been wrong.
All right. Thanks, Steve. I'll call you later and we'll talk on Friday. We'll keep going. Later. All right. So those are Steve's raw opinions on this stuff. Apparently he likes a lot of these moves outside of Nike. All right. So we are coming to the end of the market close. We're going to watch a podcast for the next hour. If you care about crypto, this podcast will be relevant. And if you care about Robinhood, this podcast will be relevant. Before we get into the podcast, here are the July metrics. So 70,000 new accounts. I thought it'd be 50. So it beat on that expectation. 4.2 billion. I thought it would be 4.1. They beat by 100 million there. AUC, look at that. Almost 145 billion, 53% year over year. Incredible. And then cash sweep. This is how they make money off of the APY they give you and the spread they collect from the banks. That's up basically $1 billion, $900 million in 1 month, dude. 72% year over year. Then look at the options contracts, dude. I mean, Robinhood, if they can keep this up, they are going to print money in Q3 because they just had their highest, 160 million, up 20% month over month, 50% year over year. Their take rate on options is 50%. So that's going to be big for them. Equities, 104 billion of trading. That's up 20% month over month. Crypto up 20% month over month, 5.3 billion versus 4.3. And then margin book, 5.4 billion. They make a good amount of money on margin interest. You can see right here, it was 4.1 in March. Now it's 5.4, up almost 2 billion, simply because they lowered margin rates across the industry. So Street not really reacting, doesn't really care. Maybe we'll get a reaction tomorrow in the morning, but I think right now the narrative is risk off until we prove the market cares. And until then, Robinhood's basically going to be flat. 1876. Again, we did touch 19 this morning, but after hours at 1876 on the day. Overnight trading is back on August 16th. Their third-party provider has been going through some issues. So August 16th, overnight trading will be back for Robinhood. But I think you can trade like SPY and QQQ overnight, but you can't trade individual stocks. And for those that want to read Steve's articles, thank you, ET, for that link. That is his link right there in the chat. Okay. Yes. Alibaba has earnings tomorrow. So, them and Walmart, those will be in the morning. That'll be big stuff. All right. So if you don't care about crypto or Robinhood, this is your cue to leave. If you care and want to see some of my commentary during this podcast, you can stay. I've heard bits and pieces of this podcast, not the whole thing. The reason I'm streaming this one is because it's not just a general Robinhood podcast. It's more tailored towards crypto and their like long-term vision around crypto. And I think if you care about crypto in general, you probably care about some of the players and how they're navigating the entire crypto ecosystem. And we have jobless claims tomorrow as well. All right. So tomorrow's going to be a big day, dude. Walmart, Alibaba. We're going to recap all of the selling because for those that are part of the market open and don't get to watch the market close, we're going to recap all this buying and selling by these hedge fund guys. And then we'll look at jobless claims. And then we'll see if Palantir can go for 32. Am I getting too greedy? Is that extra dollar a little too much? Or Or can we get to 32 maybe? So that's a hairy arm. Yes, my arm. Dude, did I ever tell you guys when I was in like 5th grade, my arm was this hairy and I wanted to shave it and my mom told me to stop being a bitch? Like legit, I went up to her and I was like, Mom, like the kids are making fun of me because it's hairy. Like, because the kids made fun of me, dude. I was in 5th grade. It was a hairy arm. Like, you don't think you're that hairy in 5th grade. Felt like the fucking Grinch in that movie, dude. And she literally said, stop being a bitch, dude. I'll never forget that. And ever since then, as soon as my mom said that, dude, I toughened the fuck up. And every time a kid made fun of me, I'd be like, all right, whatever, dude. I got a hairy arm. It is what it is. So I stopped being a bitch at a young age. Maybe everyone's waiting for jobless claims, hence flat today. That's a good point. As Liquidator 23, thank you for the $10 super chat. That's a really good point. That at the end of the day, if jobless claims tomorrow are bad, meaning they're like we lose a lot of jobs, more than expected, market tanks. If they're good, then given CPI is down, it should be the Goldilocks zone where good news is good news, not good news is bad news, because bad news technically increases inflation. So because CPI is at 2.9%, two-handle, do we have a freaking two-handle on inflation? We need more jobs than expected to come in positively, meaning less people filing for losing their jobs. And that should hopefully help stocks. So that's a really good point. That might be the reason things are flat as well. Okay, cool. Here we go. Vlad on Bankless Crypto Podcast. I'll stop it in between to give some of my thoughts, but for the majority of the podcast, we'll take a listen.
In another sense, crypto is just like technology moving forward, and it's part of a long-running trend that has gone back multiple decades at this point and is kind of accelerating with AI, of software sort of like systematically reassembling the foundations of like all parts of society.
Welcome to Bankless, where we explore the frontier of internet money. Talks about everywhere to trusted co-founder. He's the CEO of one of the most popular fintech trading platforms ever that's ever been in existence. I think now increasingly it's looking a little bit like something we're more familiar with, which is a crypto exchange. Lots to talk about today, including the future of crypto. Maybe we'll get into some politics, Vlad. I don't know if you have takes on that. The acquisition of Bitstamp that you guys recently did. Also, a Wells notice from the SEC. Congrats on that, by the way. It's a badge of honor in the crypto space. Yeah. So lots of things to get into. Vlad, welcome back to Bankless.
Thank you. Yeah, I'm glad to be here with you guys again.
All right. So the last time you were on was about 2 years ago. You guys were just rolling out a wallet. You'd been in crypto, but like dipping more of a toe in the water in crypto. And I got to say, going into that conversation is a little bit different than I feel going to this conversation. So going into that conversation, it felt like Robinhood was coming a bit from the TradFi sector, coming as an outsider into crypto. In this conversation, Robinhood has spent another 2 years in the space. You've gone through the bear market. You have your own Wells notice from the SEC, which many of our esteemed crypto companies have, joining the ranks of Kraken and Coinbase and Uniswap. MetaMask and Uniswap. So you've kind of proven yourselves, I would say. You get like a badge of honor. You're earning your stripes, really.
I don't know if I'd go that far. No, we're still a small upstart in the space.
Well, congrats on what you've done and your commitment to crypto. It's just not just a fair weather friend. It seems like you guys are here to stay. And I want to start with this question. So at the highest level, how important is crypto to Robinhood right now?
Yeah, I think that's a deep question. I think that maybe the interesting perspective that I have is we have a large crypto business, right? We report on our revenues and our trading volumes, and you can see with the data that we've been gaining market share over the past multiple years, and especially in retail, we don't have as broad of a institutional offering and a B2B offering. And we've been very focused on retail, direct to consumer crypto trading, and the market share's looking good. I mean, we're right up there with Coinbase, and the customers love using Robinhood to trade crypto. We also have a big TradFi business, and we can see both of these businesses simultaneously. And one of the things that we're seeing is how efficient it is to operate a crypto business. And a lot of the things that require centralized legacy counterparties in TradFi are being done just in software. So for example, transfer agency, clearing and settlement. You mentioned Uniswap, market making, stock lending. I mean, these are things that entire businesses and centralized organizations are set up to do that can just be done in software. And that does two things. One, it lowers the cost of serving customers and operating the business by roughly an order of magnitude. And that's because the more counterparties you have, those counterparties need to be supported. And there's fees and complexity and folks that manage all these relationships on the TradFi side. When it's software, it's much simpler. So we can see the power of it in terms of operating the business much more efficiently, providing the same basic types of services. But the second thing is, from a customer standpoint, there's actual functionality that having the software foundation provide allows in crypto that is very, very hard to get in TradFi. So for example, one of the things that we've been a pioneer in is 24-hour market, which is the ability to trade US equities around the clock. And we were the first to do that for individual named stocks. Now we offer over 1,000 single name stocks on 24-hour market, wow, which starts trading Sunday evening, 5 p.m. PST, 8 p.m. Eastern, and basically runs till Friday evening. And one of the things we've been thinking about is, why not 24/7? Like, why can't we just do it on Saturdays and Sundays? And what about holidays? Like, it would be amazing to be able to access the capital markets on Christmas, for example. And the reason is that the centralized clearinghouses aren't open during weekends. So they have to have people coming in to actually manually facilitate this activity. And on crypto rail, since it's in software, you get 24/7 basically for free. And you get fractionalization for free, which in traditional markets is extremely complex to manage. So it's not just the efficiency, but it's also this new foundation where software is providing a lot of these services, allows for product experiences to be delivered much more simply. So I think that's the real advantage. And so I think almost like the importance of crypto might be the wrong question, because like when a lot of people think about crypto, maybe what you're referring to is like things like meme coin trading and crypto assets and things like that. But I think that in another sense, crypto is just like technology moving forward, and it's part of a long running trend that has gone back multiple decades at this point and is kind of accelerating with AI, of software sort of like systematically reassembling the foundations of like all parts of society. And I think financial services, including the way that currencies are managed, have kind of been a laggard in the space, but this is just like technology further subsuming that and turning physical processes into software more aggressively.
Vlad, the Robinhood perspective, I think is pretty interesting, because I think you guys operate in 4 different quadrants that I think we're not very used to in the crypto space, because you guys are both on the retail and institutional side, and you're both in the crypto and TradFi side. And then there's like institutional crypto, there's institutional TradFi, there's retail crypto, retail TradFi, and you're in all of them. You got perspectives over all of them. And I'm wondering, like, as the Robinhood consumer base, what are they looking for out of a crypto product? The crypto listeners that are listening to this product are going to be like the crypto natives. These are the people who are going to be like, we self-custody, we touch the chain. But the Robinhood crypto consumer base is different, probably different than what might be the typical listener of the podcast. What are the consumer preferences of your base of customers, and what are they looking for, both out of crypto products, both out of the institutional side of things and the retail side of things?
Yeah, I think that it breaks down into different types of products and services depending on your segment. So for example, you've got active traders, and the way we actually kind of think about our business is all the things we do for active traders, all things that we do to be the primary financial institution across the board for the next generation of customers. And that's millennials, but also Gen Z and beyond. And then all the things that we do to take the things in both of those buckets and expand them internationally and expand them to other customers, for example, institutions and small businesses. And I think crypto fits into all three of those buckets. So crypto active traders are looking for low costs, particularly as the trading volumes increase. They want to have the easiest and lowest cost experience. They want advanced tooling, like awesome charting and access to data feeds that are real time. And they also care about coin selection because they would prefer to not disperse their trading activity across a large number of trading platforms. Because generally, particularly if you're doing sophisticated things or cross margining, having like the capital all in one place is ideal. So that's the active trader front. The more buy and hold investors care about security and safety and being with a platform that they know is going to be around for a really long time. They care a little bit less about the active trader things, but they want to make sure like regulatory compliance is tight, and they've experienced a lot of these breaches and a lot of companies that have offered things like high yields and great rates just disappearing overnight. And so that's a big concern for them. And within that segment, I guess within both segments, you have this idea of self-custody, and not a lot of people actually utilize self-custody, but they do like to know that it's there if they need it.
Over time, would you say Robinhood is going at the arc of Robinhood? Is it becoming more crypto, or are you just like equally optimizing on both?
Yeah, I think that I like to think of our business as sort of three arcs. One is all of the things that we're doing for active traders, and I'd say that crypto in that bucket is an asset class. It's also like a fundamental technology that might facilitate the global expansion of it. But for example, like crypto spot trading is incredibly important. Also, crypto derivatives are important. And these are sort of like an amalgamation of crypto as an asset class with typical.
You heard that word, right? I know you heard someone else say this word amalgamation like 10 times this week. I'm just saying, where do you think Vlad got that word from, dude? Just saying.
Traditional features, like futures have been around for a very, very long time. And crypto derivatives, I think to a customer standpoint, feel more like a TradFi product than a crypto product in many ways. On the non-custodial side, we view crypto as an accelerant to making all of our products international and being available across all sorts of different markets and jurisdictions. And I also think like over time, you'll see the TradFi and crypto worlds continue to merge, and you'll see tokenization become a bigger deal. And that'll start in overseas markets first. I think that the US will actually be a laggard here to embrace tokenization. I think you'll see it in Europe and other markets internationally. But I think eventually it will come to the US as well. And I think predominantly that's for all of the efficiency reasons and the fact that you can offer 24 hours and fractionalization more easily. I think you can also look at the success of dollar stablecoins, which are driving the lion's share of transaction volume on chain right now. I saw an article a couple of weeks ago that you guys probably saw it as well. USDT on Tron is now exceeding Visa in daily volume. And I think the reason for that is if you look overseas, people really want dollars. I think there's this narrative of Bitcoin being the greatest store of value for people in countries where currencies are hyperinflating and they want to kind of flee the local currency and they want a store of value. But it appears that people want dollars, and kind of counterintuitively, crypto has become a mechanism for people to get their hands on dollars in these markets, and that's kind of driving a lot of this activity that you're seeing. So you should assume that mean, the same holds true of US companies. People would love, I mean, sophisticated individuals overseas who have money are turning to the US markets. They want US equities, they want US assets. And if you can enable people to have that on a much bigger scale, I think that's what tokenization enables. And you'll see it overseas first. It'll lag in the US for a couple of reasons. Number one, we already have it decently well in the US. Like maybe it's not 24/7, but with Robinhood, it's 24/5. So pretty good. It's pretty easy to open a Robinhood account. So even though it's maybe not decentralized, most people don't really care and they just want access, and we do a pretty good job of that. And then we also have like this entrenched industry of all of the clearinghouses, all of the counterparties, all of the market makers, and they're happy with how things are going by and large. They don't want major changes, and there's going to be like friction to make major changes to the system over here. So I think that's why things will be slower in the US. And it's kind of one analogy I give is like the US sort of like pioneered a lot of advances in transportation. And now it feels like we're behind. Like high-speed rail has taken off in China and a lot of markets and is not really here in the US. And global payments is another example, cell phone usage, where kind of the technologies was created in the US but adopted overseas. Tokenization, I think, is going to be the same. And a big part of it is the US is already like good enough. So the incentive to go to the technological frontier of these technologies is much, much lower over here.
Yeah, I think that's right. It's kind of like, Clayton Christensen's innovator's dilemma, where the US already has all the clearinghouses and all of the banking infrastructure, et cetera.
One thing that he's saying here is that essentially Robinhood's built out all the financial infrastructure to make the stock market accessible to people like you and me. They're just going to do that for crypto now. And if they can just do that for crypto and really expand, which is the whole point, they acquired Bitstamp and they're listing more assets, et cetera. That is a business that should be able to grow rapidly, because the stock market is one thing, crypto is another thing. If they have all the clearinghouses and all that sort of back end that costs a lot of money, which is why Robinhood has 90% fixed costs. If they've already done that for the stock market, theoretically, they should be able to do that for crypto assets.
So it doesn't really feel the burning need to kind of upgrade. And so other jurisdictions, emerging markets, et cetera, kind of like leapfrog us. The broad stroke of what I hear you saying, Vlad, kind of aligns with a thesis that Bankless has held, that David and I have long held. And I think it's actually starting to come to fruition. We've called this before, like the DeFi mullet thesis or the crypto mullet thesis. And it goes like, basically, you've got fintech in the front and then crypto in the back. And the idea behind this is that fintech companies, in particular, companies like Robinhood, are uniquely positioned to basically swap out your banking infrastructure over. When I say banking infrastructure, I'm talking about the clearinghouses, the settlement, the like old style of tokenization, the stuff that takes off banker holidays and that doesn't work the weekends, and all of that legacy stuff, the mainframes of the world, the back end of finance. And over time, just kind of like swap it out for the new crypto stuff. And the beauty is you don't have to do it overnight. You can kind of like do it as you're doing it right now. So first you have assets that are crypto assets listed that are settled on chain. And then what do? You break into a non-custodial wallet. And so you start doing that. And then maybe you acquire a crypto exchange, which you have. And then you get into more crypto native type use cases. And over time, you're kind of like hot swapping the financial backend from the old legacy system to this new system. And I don't think that Robinhood's obviously the only entity that's going to discover this and go through this transformation, though you're positioned well, and you may be one of the first to kind of see this. But high level, do you think that's effectively what's going on here? Is we are software is eating the world, the Chris Dixon line, and now software, it's finance's turn. It's all done in paper and faxes and legacy mainframes. And now we're making programmatic blockchains. And fintech is just going to basically hot swap the back end of its financial system. And that's going to happen over the next 10 years. How close is that aligned to what you're saying, what you're seeing?
I think that's pretty close. I mean, with the caveat that incumbents are going to be slow. I mean, a lot of the incumbents have still not made the transition to servers, right? They're on mainframes. So you have to go from mainframes to servers. And then of course there's like the on-prem to cloud transition that Robinhood didn't have to go through, because we were sort of like formed at the point where cloud became kind of good enough. There was still a little bit of friction, actually. Like there was a lot of pressure for Robinhood to be on-prem because the market makers and counterparties didn't really trust Amazon to provide reliable services, even though in hindsight, we know Amazon services are much more reliable than you managing your own on-prem infrastructure. And so we were kind of the first cloud native brokerage platform that got to scale. And then you have AI and crypto, which are the new platform shifts that can change the technology as well. So I think a lot of the incumbents are looking for COBOL and Fortran developers, and that's a big problem. And yeah, I think the question will be, are they going to jump and adopt crypto? Well, you kind of have to either discard all of the old stuff or like really quickly go through all the shifts, because you're not going to be able to run a blockchain node on a mainframe on premise unless someone's figured out something that I haven't seen yet. But I think that's a real problem for incumbents. And I think it's further exacerbated with AI, when now you're thinking about, okay, like, how am I going to train models and augment or replace a lot of the internal processes that I have, which further accelerates some of these trends that you guys have been mentioning.
All right, so let's talk about what you're doing now. Let's talk about some of the recent things that we've seen coming out of Robinhood, and we'll start maybe with the Bitstamp acquisition. So Robinhood is set to acquire Bitstamp. This is a press release that I'm reading. For folks that don't know, Bitstamp is an exchange, an OG crypto exchange. It actually started in 2011. Fun fact, when I created one of my first crypto exchange accounts, I was going through, this was like one of the accounts that I have a legacy account on, all the way back from 2014.
Yeah, me too, actually.
Yeah. Okay. So Bitstamp, I mean, I remember them back from way back then, and especially in Europe, it has a pretty strong reputation. So what's the strategy here? Why'd you guys do it?
I think that, as we were thinking about our long-term plan, we knew that we would have a Robinhood exchange at some point. I think that needs to exist. And the question was really, do we build it ourselves, or do we see an opportunity to accelerate that? And of course, an exchange has the underlying technology, but also the licenses, the institutional relationships, retail relationships, less important for us because we already have those. And that's an area where we feel like we're differentiated and we have a strength. And then, when we came across Bitstamp, we saw a big opportunity because they have a long reputation. They have a lot of licensure, global footprint, great institutional relationships. And we saw an opportunity to accelerate the build out of what would otherwise be our own exchange by at least 18 to 24 months. And that got us very excited. And, it's also important to get some street cred with the community. Now we can say that we're one of the OG, we're the oldest running crypto business that continuously operates. I mean, of course, assuming the acquisition closes as we expect it to and everything. But yeah, I look forward to being able to say that. Yeah, we've been running our exchange since 2011. Nobody else in the business.
Time. As old as Mount Gox.
Where I also had an account. I feel like
my condolences.
This is another reason I think Vlad's gonna figure out this whole crypto thing with Robinhood, dude. If he had an account on Mount Gox, like he's been in crypto for a while, dude. This is a math guy who's been in crypto for a while, and I think they're acquiring Bitstamp because they know what the vision is. And now over the next couple of years, if you believe crypto in general is going to expand, I think Robinhood and Coinbase are going to be up there as key players. And you've got someone like Brian Armstrong, Vlad, that actually understand the crypto industry.
Seems like it's wrapping up. But,
yes, finally.
Long storied history of getting Japanese letters in my email.
The Robinhood exchange feels incredibly disruptive. At least in the crypto space, we're not totally foreign to new exchanges cropping up. Like, it's still a young space. New exchanges coming up all the time. Bitstamp, of course, not new, but just like the idea of like Robinhood being an exchange, a crypto exchange, I think would be interesting for us. What would be even more disruptive if that also you took the Bitstamp technology and started to apply that back towards the equity space, because I mean, exchanges are exchanges no matter what assets are traded on them. Is that part of the intent?
Well, when you look into tokenization, which we talked a little bit about, and that's a space that Robinhood is very interested in, and I think is well positioned to be a leader in. One of the things that you look at with tokenization is where are you going to trade them?
Right.
And of course, they have to be listed on reliable exchanges. And the more assets that we have, the more important it becomes to have the underlying exchange technology as well. So for sure, I think it enables a lot of things for us, not just in traditional crypto assets.
Some of our listeners might be asking this question when we say, Robinhood's expanding into kind of the crypto exchange territory. They might say, hey, wait a second, Vlad, you guys already traded crypto assets. Weren't you already a crypto exchange? So what distinction are we making here when you say like Bitstamp is a crypto exchange versus all of the assets that the crypto assets that Robinhood has traded prior to this Bitstamp news?
Yeah, I guess it depends on your definition of an exchange. I mean, some people call exchanges things that convert from dollars to cryptos or cryptos and other cryptos. And I think by that definition, you could call, I mean, with the Robinhood app now, you can put in dollars and convert it into crypto. And with the non-custodial wallet, you can also swap between cryptos directly. But what Bitstamp provides, and what I mean when I say exchange, is the core matching engine technology of matching buyers and sellers. So that we currently don't provide. And when you place a transaction through your Robinhood app, we're not matching buyers and sellers together. We're actually just acting as an agent and transmitting your order to the market where they're being matched.
Mm-hmm.
Okay.
I say, so this idea about tokenization has been a word in crypto ever since that I've been in crypto. And it does feel like the engine is finally starting to turn over in the last year or so, especially with the introduction of BlackRock's BUIDL fund. But there's many efforts that are also like meaningfully growing underway. You kind of think that your position with the acquisition of Bitstamp might just be able to just completely leapfrog all of your legacy competitors in terms of being the location to being the dominant liquidity marketplace for tokenized assets whenever the crypto industry can figure out how to tokenize more assets. That's your position?
Well, I think when I look at tokenization, I think stable coins are actually a pretty basic form of tokenization. So I think we're already there. I don't think there's like much that needs to be done. Assets are being tokenized. Stable coins, which are kind of akin to tokenized treasuries or dollars or money market funds, are gaining adoption. And you're going to see that market evolve. And you'll see more and more assets being tokenized. And in a world where more assets are tokenized, you're going to have a couple of different participants. One is kind of the traditional exchanges. And non-traditional, so Uniswap and other decentralized exchanges and liquidity pools will have a part to play there. You will also have asset custodians. So the traditional assets that are being tokenized are going to have to be stored somewhere, and the custodians there will have to have the ability to deal with TradFi regulations and TradFi rails, and you're gonna have to work with the conventional system, and so like you're also going to want to minimize the number of counterparties, because if you can kind of like do everything in one place, the user experience is better, the underlying economics are better, and users will have to pay less, and so I think the natural sort of like contenders in the space are those that have the ability to custody traditional assets and have core competency there, but also have the crypto rails and easy access to both sides. And I do think Robinhood is well positioned in that space.
How about with the Bitstamp? Are you guys positioned to do some like some more of the staking type services, that's been blocked in various ways in the US, and maybe from a capability perspective, you haven't had that before. But what are you thinking of getting into with respect to staking or even institutional lending, things like this?
Yeah, those are big institutional businesses. As you pointed out, the SEC has taken the position that staking is a security in the US. So that's why we offer staking in the EU, but unfortunately, we're not able to offer it in the US.
Oh, so you do offer it in the EU right now, staking through Robinhood, or is that through Bitstamp or through Robinhood? Okay.
Yeah, you can stake on our Robinhood EU custodial app. I think we just rolled out Solana staking a couple of weeks ago. Yeah, I mean, staking, from a technology standpoint is pretty straightforward. I mean, like most of that is just node management, and it's also fairly easy for a customer to stake themselves if they wanted to use our non-custodial wallet. So yeah, I would be surprised if like centralized staking was a really big thing 10 years from now. But customers also like a clean user experience, and so some of these like decentralized products do suffer from usability problems. So I think that's what I'd like to think the decentralized version and kind of self-custody will win out, but it remains to be seen.
Let's talk about the decentralized version, the self-custody winning out, and what you're seeing there, and what you're looking at. So you guys have had a custodial wallet for a while, what we call a bankless wallet, because again, it's your keys and your crypto. When you have your own custody, it's self-custody, right? So what's the plan for this? And I think from the crypto side of things, I guess I will say we had hoped that non-custodial wallets would take off more than they currently have, is a statement that I'll make. And I think a lot of bankless listeners hearing this will agree with this. And we've been playing, like, transaction fees are difficult, seed phrases are difficult. The UX behind this stuff is hard currently right now. We're a few steps before smart contract wallets, which feel a bit more like the best user experiences we've seen in TradFi. So the builders have had to build things in order to start to catch up to what we already have access to. And, an app like Robinhood, the custodial version, or an app like Venmo. But we're getting there. We're getting close. What's your outlook on self-custody wallets, and what are you doing with the Robinhood wallet?
I think that you're going to see more integration of self-custody components into products that are traditionally considered custodial, and vice versa. So I don't think you're going to have too many pure play self-custody only solutions that like survive in the marketplace for very long. I think that this is going to be a component. It'll be componentized and featureized within larger ecosystems. And I think you're already starting to see like products that started off non-custodial in nature adopting more and more custodial and TradFi elements, and vice versa. So for example, even via MetaMask, like a big sort of development in the past couple of years is them investing a lot in their on and off ramp technologies and connecting with traditional money rails so that you can get your US dollars really easily and buy with one tap and with minimal fees. And actually, Robinhood Connect is a big player there. We process a lot of MetaMask's on-ramp volume. And
wait, really? So what is that? What's Robinhood Connect?
Robinhood Connect, you can think of it's an on-ramp, the lowest cost on-ramp in the markets that we operate typically. And we partner with MetaMask, we partner with Uniswap, and some of the other DeFi wallets. And simply put, the goal is to offer you the simplest and lowest cost way to take your dollars from your bank account or debit card and convert them into your crypto of choice, fully non-custodially in nature. And the way we were able to do that is we had to. The big problems in the space are fraud, money reversals,
right.
The cost of accessing, the cost of like operating the money rails. And because we built a big business serving consumers with our crypto business, we were able to kind of break it apart and offer that as a service to businesses.
I didn't know you guys were doing that. So you basically just took this capability they already have and decoupled it and offered it as a service. And now you get a like fiat on-ramp type service that you can provide crypto wallets.
Yeah, absolutely. And in the wallets that we serve, we tend to like quickly, for those that optimize by cost, we typically quickly tend to rise to the top because we offer low costs because we had to solve all these problems for ourselves. But anyway, my original point, the DeFi products are becoming centralized because they figured out that customers really have dollars and they want to make it as easy as possible to get into crypto. And then I think over time, you're starting to see some of the centralized products integrate non-custodial wallet functionality as well. And I think the early form of that was through Robinhood wallets. Like in our custodial app, we offered the ability to withdraw and deposit on live blockchains. And we've been continuing to invest in that, making it faster, finding ways to make the fees lower. And so I wouldn't be surprised for the distinction to sort of like disappear at the product level over time. Like the self-custodial wallets will end up looking more like centralized platforms and vice versa. And we'll end up taking the best functionality of both into one product experience. And of course, the sort of like unpredictable part is how regulations are going to evolve in this space. But I think there might be zigs and zags, but over the long run, these will be the same products.
Again, I think Vlad, we got about 30-ish minutes left of this interview. I think he just understands this industry very well. And he's speaking like someone who knows about what they're doing in crypto and he has a vision for it. For him to even talk about things like staking in a confident way means, he's not new to the industry. So I think there's a lot of plans they have to do with crypto. One quick stat for you guys. Bitstamp has $3 billion worth of crypto. Robinhood, I saw last night. I forgot to mention this on both streams today. Robinhood has $4 billion of Doge. So Robinhood has more Doge than Bitstamp has of like Bitcoin and crypto and everything combined. So they're paying $200 million to acquire another $3 billion of assets, which means their AUC is going to go up in February. So that Q1 quarter 2021 is going to get a bump from that. And they're only paying $200 million to acquire those assets. So overall, it seems like this acquisition should go well for them.
One of the products or announcements that you guys have announced relatively recently is a partnership with Arbitrum, which is where I think probably Robinhood has its biggest on-chain footprint, if you will. I think the way that this works is that the Robinhood wallet, if you make a swap, it swaps on Arbitrum. And then both Robinhood and Arbitrum have agreed to just kill the fee that's associated with that. And that's pretty cool. I'm guessing that this partnership expands. At least that's my intuition. That's my gut feeling. I'm wondering where this whole thing might go from here.
Yeah, well, we like the Arbitrum guys, and they've been great partners. So we'd like to do more there. We also have been working with pretty much all the blockchains, and a lot of people are building interesting things. And our philosophy tends to be, we want to partner with as many people as possible and bring the best of what they have to offer to our customers. So generally, I think Robinhood is like adverse to working with one partner, because not everyone can do everything and can serve customers in a number of ways. So, we've partnered with Polygon folks in the past. We've worked with all the chains, and we just want to pick whoever can help us deliver the best customer experience and the best reliability.
And so, Vlad, I don't know if you can confirm or deny any rumors, but I'd like to hear kind of what you think about it. So we've had many crypto exchanges that have expanded into developing their own chain, or at least supporting their own chain. So you have Binance, of course, and they have the BNB chain now that's kind of affiliated, and that's been a long-standing chain, a layer one, as we would call it. You'd have Coinbase, who's gone in the layer 2 direction, kind of like partnering with Optimism for that and kind of rolling their own functionality into that. It seems to be a strong base for support. Does Robinhood have any chain type aspirations? The first step is a non-custodial wallet. Maybe the second step is an entire non-custodial chain. What do you think of this?
I think that Robinhood's core competency is these areas where traditional finance and crypto kind of merge and meet, because we've got such a big presence and knowledge of both. And I think that makes us quite unique. And that's why we've been focusing on those interface points. So on and off ramps are kind of a great example of that. Tokenization is another great example. And I think the way that we would think about creating our own chain or other protocols or Bitstamp the exchange is can it kind of help us accelerate that? Can we accelerate our vision of being the best interface and really on ramp in the general sense between crypto and the traditional world? Because I think that's something that we can do better than no one else, and it takes advantage of our scale and our capabilities and all of the work that we've done to get like extremely deep in TradFi. And whether we're building our own chain or offering like specific crypto native products is really more a secondary way to enable that vision.
New projects are coming online to the Mantle Layer 2 every single week. Amount of tax
and incentive,
but also maybe also in the crypto space. I know you guys just came out with a spiffy new credit card.
Okay, this credit card segment is really good. It's some good stuff he talks about on the card.
You're getting into the world of credit cards. What about payments? Are you guys trying to like penetrate into that market as well?
Yeah, I think that we'll want to make it easy for customers to pay each other and to spend at merchants. Credit card being a great example of how we can do that. The economics are powerful, right? If you can give people 3% rewards on every swipe, that's a strong value proposition, and that's resonated really well with early users of the credit card, and the demand for that is growing very, very fast. So the bet that we made was that we could probably take our customer acquisition and incentive costs to zero with this product by just making it so good. And it seems like that's playing out. In terms of crypto payments, I think that in the US, you have the problem of credit cards being very difficult to compete with. And in this one, it's not just that they're good enough. They're actually like significantly better. Like it's going to be hard to offer anything that competes with 3% rewards in crypto in a sustainable way over the long run. So I think you'd have to look overseas as a way to do that. And I think overseas, the picture is a little bit better, and you can look at remittances and cross-border and also intra-country payments in areas that don't have developed banking systems. And I think Robinhood will be a player there. To some degree, we are with non-custodial, but we're also like branching out and expanding the core Robinhood products and services in global markets. And so I think you should expect payments to be a part of that.
I do want to ask about that 3% business model, because 3% is like, it's pretty good. It's pretty good. That's pretty high. I actually do have like the Robinhood credit card, and as we were prepping for this pod, yeah, right, yeah.
I was jealous. I was like, where'd you get that? 3% is pretty generous.
That's awesome. Have you been using it?
Yeah, I've been using it. Yeah. So I just like press. I didn't actually realize like how the points work, because like whenever I like swipe the card, they're like, oh, points. I'm like, oh, funny, points. More points in my life. But then I realized that like there's a little tab where you can actually like disperse it. Like you can actually get it in cash to your Robinhood account. And the only thing that I use my Robinhood account for, the one thing, is to buy Coinbase stock. And so it just turned into Coinbase stock. So it's actually it's like 3% cash back, but for me, it's actually 3% just like free Coinbase stock.
What's so cool about this, dude, is like, if you are in the investing world and you have a Robinhood account and you're getting 3% cash back, and you spend, I don't know, even a couple $100 a month, and you can acquire more like Coinbase, if you really like Coinbase, for free, just for like buying your basic goods. That's exciting. And I think to anyone who has an investing mind and is, somewhat financial literate, they see that as a massive opportunity. And the seamless integration of that 3% cash back immediately going to the brokerage is A, amazing for Robinhood and net deposits, B, great for trading volumes because you get more people buying more stocks and potentially even options. And then C, it gives people an incentive to keep using the card because they get free Coinbase stock in this example from the cashback.
is that kind of the business model? Like you can offer like I think the Apple Card does 2%. Other cards like do 2%. 2% has been like the industry standard. That extra 1% is just because like the likelihood of the consumer to like keep it back inside of the Robinhood ecosystem is sufficiently high. Is that where the margins come from?
Yeah, and maybe I'll ask you, like, has the card? My guess is it's like top of wallet or near top of wallet for you, right?
Well, okay, so I'm a big Apple Card user. So there's 3 things in my Apple wallet, which is my credit card, which is the Robinhood, my ID, and then a business card. Yeah. And so yes, it's one of the 3 things. But I actually use Apple Pay like 99% of the time, anyways.
But Apple Pay with your Robinhood card,
with my Robinhood card, yes, right.
Yeah. Because Apple Pay, I think, gets you 3% cash back on Apple purchases.
On Apple products, which I'm not buying an Apple product every single day.
Yeah, I mean that's also what we're seeing. It's becoming top of wallet rapidly for everyone that adopts it, and there's a lot of noise on social media about the rollout going slowly. But it's just because people want the card so much. The digital experience is so good. They like the physical card. The family features and the virtual cards work well also. And of course, the rewards. And we've rolled out 50,000 of them, which is basically on par. If you look at kind of what other successful credit card businesses have done in their first year, we're like right there. So the rollout is progressing. And in terms of the business model, one of the things that you can do is look at public companies that offer credit card businesses. Capital One's probably the best example there. And you can see that the revenue comes from 2 basic things. One is the interchange, which is revenue from each swipe, and the rewards are contra revenue on that item. The bigger piece is actually net interest. So that's the interest generated from holding balances for customers that are revolving. And a cost to that piece is, cost of funds is netted out. It's contra revenue, but the loan loss provisions are another part of there. And if you look at what they can do, which means total revenues generated by a typical card business divided by transaction volume, you get to something in the 5 to 6% range. And of course, there's headcount, there's marketing expense, and those are actually the largest costs, which as a technology company, we believe that we can lower significantly beyond what the incumbents are doing. So that's the belief. 5% and 6% are a lot higher than 3%, so we'll have some margin to play with. But there's a lot of details and a lot of learning that we have to do. We have to look at borrowing activity, spending activity, make sure that the underwriting is really, really good. But the benefit that we have is people love this product, and we've got some of the best people in the world that want to come help us work on it too. So I think that I think it'll be really good. And early reviews from customers are just exceptionally high. So it has a 5-star rating with thousands of reviews on the App Store. Maybe you've seen the app itself, but it's like extremely easy to use, and it's a very nice experience. I've got my kids and my whole family is on the card, which they really love. They love going to the toy store and paying for their toys with their own credit card.
So again, I think a lot of people critiquing the card, they're going to lose money, all that stuff. We talked about it this morning with Tanner, so I'm not going to belabor the point. Belabor, that's a new word. The vocabulary is getting up there. But the point is they have a margin, and if they can get the underwriting done correctly, because the sales and marketing is figured out, because they have all the users, then the card's going to be relatively cheap to roll out. And as long as they keep the losses minimum and they get more of the deposits coming back into the platform from the 3% cash back, then we got a pretty successful credit card business that theoretically can scale massively with the company as they grow. So they've got crypto, they've got the brokerage, they've got the credit card business. I mean, there's just a lot of moving parts to this thesis, and you can buy it right now for an $11 billion enterprise value, growing 40% year over year. Again, that's why it's exciting to me. Market might be pricing in a recession, job fears, all that stuff, which is why it's kind of flat. But I think that's kind of the core thesis. And if that growth continues to scale, then we've already seen the analyst community get excited about it, and we've already seen the stock go up as well in July.
So I think this thing is going to be really, really good. Like it's not evenly distributed yet, but I think it has the potential to change the credit card business and the credit card industry.
This kind of gets to like three things that I like, that I appreciate that Robinhood is in the space. Like, you know, like the first thing is you have like 25 million customers, something like this, like a lot of customers, and you're offering services that typical crypto exchanges don't really offer, right? So you sort of get the person who just wants a credit card, but then maybe suddenly they're crypto curious, and then Robinhood has an on ramp to kind of convert them to crypto. I got to say, Vlad, for an organization like Bankless, for a media company that's all about the evangelism and propagation of crypto, we love tapping into new markets, right? And like get them hooked on it early. So that's nice. The other thing I think that's nice is I feel like if Robinhood is investing in it, you guys seem to take a very pragmatic approach, right? In terms of like, hey, we're not going to do something. There's not a big place for crypto to fit in our credit card, product set, so we don't do it. And the places where you do invest, like it's very pragmatic, and you're seeing some places where crypto, from an infrastructure perspective, can really benefit your business and improve the existing traditional finance system. So it just like feels like real to me. And then the third thing, which is maybe our next discussion, is you are now part of the squad that is resisting the SEC, unfortunately, or fortunately, I suppose. So in May, Robinhood joined the ranks of organizations. This went public. I'm not sure how much you can actually say about this, but that received a good old nasty gram from Gary Gensler's SEC, a Wells notice. And this is very familiar to people who've been in crypto. I mentioned a few other organizations that have them. It's almost become, Vlad, like a badge of honor of like, you get one of these, it means you're doing things in crypto, basically. And so I want to start by you talking about that and kind of the reaction and what you're doing. But first of all, getting that letter, getting this reaction from the SEC, what was your first reaction to seeing this? And had you been in conversation with them, or did this just come out of the blue?
Yeah, we talk to the SEC all the time across all of our businesses. You know, we have several regulated broker dealers, a clearing firm, and of course the crypto business. So we've been in conversations for a while. A lot of that was disclosed in our quarterly filings. For example, that they were investigating certain aspects of the crypto business, including whether any of the coins we list they believe are securities. And we'd also been engaging proactively with the SEC. You guys probably remember in a bunch of interviews, Gary Gensler came out and said, we're open to crypto firms. If you want to do anything interesting, come in and talk to us.
Come in my office and register. We just want to have a talk.
So, we're like, we took that seriously, and we went in and we attempted to register. And of course, we did a lot of work. We spent a lot of our resources coming up with what we believe was a pretty good mechanism to register, which was, it's a little bit technical, but it's called a special purpose broker dealer. So we came up with this construct, special purpose broker dealer. You can trade crypto assets, and essentially these conversations, and we probably had like 16 of them.
16?
Yeah, we were going in there 16 times, and then at some point it kind of became clear that it wasn't really going anywhere. And I don't know what was going on behind the scenes, but eventually we just get an email, and they were like, "Well, we don't want to talk with you guys about this anymore."
Wow.
So there was that.
Yikes. Wells notice is not a lawsuit, but it's the I guess the intent of a lawsuit. That's what it is.
Yeah. Well, yeah, and I mean that's another thing. Like, it used to be that 90% of the time when you would get a Wells notice, litigation would follow. But now you kind of have these Wells notices that have been hanging around for a while and just kind of sitting there, which is a new thing. And I think to some degree, like the seriousness of a Wells notice is almost being lost by this.
I would say so.
Well, we introduce it as congratulations, not oh no, I'm sorry.
But anyway, we went in good faith. I do want the U.S. I think long term the U.S. is going to have to embrace this technology because it's legitimately useful, and We don't want to send it overseas. We believe customers should, in this country, have the freedom to choose what they want to do with their money and access these technologies if they want to. And we think it'll be good for the country. So I think eventually we'll get there. And I think that we'll have to play a big part in pushing for that to happen sooner and accelerating that. So it would be a shame if, I think it would be like contra the mission of the US to go the route of China and India and just like ban cryptocurrency overall. I don't think we want to be in that direction. And that's one form of stable equilibrium. The other part is to like integrate it and embrace it and set clear rules for how companies can adopt it. We're not getting that either. And we're kind of in this unstable place in between right now. And we're going to push for it to be resolved, and hopefully it is resolved.
Vlad, do you have a take on what's motivating this? What do you think? Like, why is this going on? Why are we getting Wells notice?
It's Gensler, bro. You get rid of Gensler, I think you get rid of a lot of this stuff.
This is in crypto. I mean, the crypto industry's perspective is that it's been unfairly targeted, that we have some members of sort of the administrative state and other like areas in the political apparatus that are kind of like saying crypto is bad and just going after it in a targeted way. Do you have any takes on this?
Yeah, I think that the administrative state is, the administrative state is pushing back because the US is a leader in financial services. I mean, we've set the standard worldwide in many cases. And so a lot of big companies and organizations have a lot to lose from a changing of the guard here. Even you look at stablecoin adoption, which surprisingly, that's like the most. There's stablecoin bills that are in pretty advanced stages. They're making their way through Congress, and that hasn't been kind of like in the direct line of fire of regulators. But if you can create a stablecoin easily, then that's something that's kind of scary to the banks, right? I mean, they've spent all of this time and invested all of this resource in building up regulatory infrastructure, and they have to comply with all of these onerous reserve requirements and capital requirements. They can't grow very fast because their growth is limited by the OCC. And so, from their perspective, they're looking at a stablecoin issuer and they're like, oh, well, these guys can hold treasuries and issue stable coins too, and they don't have to deal with any of this. That seems a little bit unfair to them, right? And so you can understand why they would fight it, and that the fact that like the industry is so powerful and advanced here just sort of like explains why there's more friction.
You just use the term fight it. And I feel like that's been kind of a shift that we've seen over the past 2 years, and something that David and I have devoted a lot of time to on Bankless, just kind of like covering it, because crypto has felt like it's had to pivot into like just survive mode, fight mode, kind of resist mode. And like through two forms. One is resisting these types of things from the administrative state. So if you get a Wells notice, if you get brought into a court case, rather than kind of like settle, it's just like organizations like Uniswap and Coinbase and Kraken doing things like pushing back and like countersuing in some cases, right? It's just like it's time for that, or else where does it stop? So take it to the courts, and I'm curious what Robinhood's intent is. So if this Wells notice turns into something, are you guys gonna like take this to the courts? And then second to that is also the question of getting involved kind of politically. So we've seen a lot of this from crypto organizations, Stand With Crypto, other organizations that are just saying, hey, this is now a political thing. If we want to change the administrative state, and it goes back to kind of like politics and legislator and who our politicians are, getting involved in that process a bit more than we have been. Crypto let SBF do it for a while. That was a really bad idea. So now better organizations are kind of stepping in. What is Robinhood doing to kind of resist and join the fight here?
Yeah, I mean, I think the whole SBF thing was a big step backwards. Because somehow like Washington embraced SBF.
Yes,
and
we sent the wrong guy to Washington. That's for sure.
Big egg on the face of a lot of people who wish that those photos would just disappear. Unfortunately, look, our intention is to we don't really want to be in litigation, and we're in a lot of it, right? we've had the unfortunate experience of being in an industry and innovating, not just with crypto, but traditional assets as well, and disrupting. And sometimes it's necessary to go all the way to conclusion and be able to see something through in order to resolve something. But our intention isn't to litigate for litigation's sake, but we have to stand up for what we believe is right and defend our business. And that's really what we're doing here. We're defending ourselves, defending our industry, and we believe we're in the right because we're actually a highly regulated and compliant participant in this space, unlike some of the others where there is,
which is why they don't have Solana, right? They would have all that juicy Solana revenue, but they want it to be friendly with the regulators, and Robinhood's given up a lot of money because of that. So they really take the extra step to make sure they're compliant.
It's a legitimate point to make that they knowingly are skirting regulation and taking a ton of risk and playing fast and loose. But we've been pretty conservative with coin listings. We've been, taking heed at what the position of the regulators are. So I think the fact that the idea of litigating against Robinhood is almost comical to me relative to all of the activity that's happening in the industry.
As a result of the Wells notice, have you guys changed anything? Is there anything? Was there anything that was impacted, or did they just not give you enough information to be able to actually change any sort of business lines or products that you offer?
No, we haven't changed anything. I mean, we've responded to the Wells notice, and we don't really have an update to share there. I think the good thing is we just have a lot of stuff to build in the US. And so we actually feel pretty good about the crypto business, regardless of which administration is in power, whether it's Democrats or Republicans, because, even if there's some lack of regulatory clarity for some amount of time, I think eventually it'll get resolved. And in the meantime, we can focus on improving the customer experience, bringing down pricing, adding more active trading tools. So the team in the US as well as internationally has just been cranking super hard on making the experience better. So the roadmap will be full, and maybe some things will shift here and there depending on what the regulatory environment is over the next year, but we've got plenty to do.
So Vlad, here's kind of a nerdy question I was just thinking about as we're getting to this conversation, which is basically the Robinhood business model and how it kind of relates to the crypto business model and the blockchain business model. And of course, Robinhood has zero commission trades and sort of a revenue stream on payment for order flow. And one thing that David and I say when we try to explain what blockchains are, how they generate fees, is blockchains sell blocks, and they sell it in two forms, either in a transaction fee, which is interesting, or the ordering of a transaction, basically order flow, right? And they can adopt both of these mechanisms. Some are skewed towards one, some are skewed towards the other. If you think about Robinhood, it's mainly skewed towards the payment for order flow business model. And in crypto, there's tons of debates about this, order flow. Is it good? Is it bad? Is it arbitrage? Some kinds are toxic, some are not. Call it MEV is another term for it, internal. And I guess sometimes it's celebrated, right? Sometimes it's a revenue driver for this particular blockchain. That's what gives the token some sort of upside value. Other times it's kind of castigated as this is predatory to users. And you've been in kind of the payment for order flow business for a while. So what are the goods and what are the bads that come of it? Do you have any advice for us? How does it go wrong when it goes wrong? And what's been your general experience that's relevant to crypto?
Well, a couple of things. One is Robinhood actually has 8 businesses now that generate 100 million plus in annual revenue. So it's probably more diversified than you might think based on kind of the headlines. And more than half the revenues are actually net interest based. And this shifts up and down, but net interest exceeded transaction based revenue at some point last year. And we were able to make more revenue from interest than transactions. There's also stock lending. There is instant withdrawals, spread on gold deposits, and of course, like interchange on the credit card has been increasing. Payment for order flow, I wouldn't compare to MEV. I think MEV is like this like weird thing that would not be allowed in traditional financial.
Oh, really? Interesting. Get into that more.
Yeah. Yeah, I mean, payment for order flow does exist in crypto as well. I mean, it's not called payment for order flow, but it's basically revenues generated by routing through market makers. And to some degree, like it's closer to spread than anything else. It's like whenever there's a spread between the bid and the offer of an asset, that's a profit pool that's split between the end customer, the broker, and the market maker or the exchange. And one way to think about payment for order flow is it's the component that's going to the broker. The fee is the component that's going to the exchange. And in traditional financial markets, we call the part that's going to the customer price improvement. So price improvement plus payment for order flow plus exchange fee or risk equals the spread. MEV, by which you mean reordering transactions in the order by which they go to miners and are processed by miners.
Yeah, basically the value of that, the value of being able to kind of slip your order or order the transactions in some way, whatever the economic value of that is, that would be the MEV portion of like ordering a block, right? And this is where you see, Ethereum generate revenue like this. Layer 2s generate revenue through block ordering, also Solana. So the interesting thing about this is, of course, like this is why MEV is such an intense area of focus, particularly in crypto and for blockchains, is because in crypto, obviously, because these networks are decentralized, we're trying to solve MEV type problems at the protocol level, rather than rely on kind of like the legality of a nation state. Otherwise, you start to lose the whole decentralization aspect, and why MEV has been such a thorny problem, and why people, the Ethereum Foundation and other researchers really are honing in on it. So I guess that's TBD whether we solve it or not in crypto at the various blockchain level.
I mean, I think that one interesting thing there is. I don't think MEV has a real analog, but there is a rule called Reg NMS in traditional financial markets, in the securities markets. It's called Rule National Market System. And basically what it does is it governs the prices that assets are executed at in a multi-exchange, multi-market center setting. So, back in the day, and there were multiple exchanges, right? You'd have exchanges in Chicago, Boston, New York, and they'd all be trading the same things. And then all of these off-exchange venues and dark pools started being created, where you can have like order flow that doesn't even make it to the exchange. And then the question is like, what governs what price orders in the dark pool get executed at? Is it just like the best efforts of the administrator of the dark pool? And maybe in some cases, if the people that are putting their orders in there aren't sophisticated, they could get taken advantage of, right? So that was the principle. So Reg NMS made it so that any orders that are executed off exchange, and there's a few caveats, but the basic idea is off exchange orders have to be executed at the best price across all of the exchanges or better. And so all this infrastructure, like the consolidated tape, was created to create a benchmark. And if you're trading off exchange, you have to sort of like improve upon the best listed price.
See if we can solve this without regulation, but it's still an issue for crypto. Vlad, I want to ask you about kind of the cycle that you're seeing right now. Obviously, we've had a weird week with respect to like different macro events. It's definitely been up and down this week. Some have said this is going to be an institutional-led cycle, at least for crypto. And I'm wondering what you kind of see. Of course, we have the Ethereum ETF, institutional flows. seem very strong. I've seen some of the earnings reports for Coinbase, for instance, and it's kind of institution led. Well, what's your take on this? Is retail here yet, at least like in crypto? I'm sure they haven't left with respect to equities. It's a lot different this time around than it was in 2021, last bull cycle that we saw where we had stimulus checks. It was, very retail led. Is this different?
Yeah, I think it mirrors that of equities somewhat, in the sense that if prices are going up, you have a lot of casual investors that re-engage with the asset class. And you saw that happening in the first quarter of this year. Prices went up. Lots and lots of people came back and started trading crypto. A lot of those folks that have kind of like gone away in 2022 and 23. And you saw that in Robinhood's monthly active users, for example. A lot of crypto people came back. Crypto volumes and revenues went up quite a bit. Then you see this contingent of active traders, and they tend to trade more sophisticated products. In crypto, it's like crypto futures and perpetual swaps outside of the US. That tends to be a little bit more resilient, but there's an analog to active traders for our traditional US assets like options. They tend to make money. They have strategies that can operate in every environment, even the ones where it's going sideways or going down. So those tend to be resilient. And then you have the institutional flows, which seems to be mainly Bitcoin and Ethereum ETFs were kind of the big thing there. And Bitcoin ETFs have amassed a lot of volume very, very quickly, very fast growing. Ethereum ETFs a little bit less so, but we're keeping our eyes open to that. I think so far in July and August, we've been seeing just very large volumes, 20% higher than what we've seen in June across the board. And August so far has been tremendous. Customers are buying the dip. The first week of August, we saw over $1 billion in net deposits, with about $500 million just in this Monday alone. So retail seems to be buying the dip here across pretty much all asset classes.
That's cool. It took some courage to buy the dip, particularly this week. Vlad, this has been a pleasure. Maybe as we close things out, so David and I have the pleasure of the years to host many of the crypto exchange leaders, various CEOs and founders, some of which, by the way, are in jail right now, actually. Others are still with us fighting the fight.
Wow.
And we asked them kind of this question of just like, why are you here? And what does the end game look like for your particular exchange? Let me ask you, like, Vlad, what is Robinhood here in crypto to do? And what does the end game look like? Say 5 years from now, where does Robinhood want to be with respect to crypto?
I think that 5 to 10 years from now, we want to facilitate anyone, anywhere in the world to buy and sell and hold any financial asset and perform any financial transaction. And we think that Robinhood can provide great service, be the best place for our customers to do that. And I think crypto is going to be a huge part of that, not just as an asset, but more so as a fundamental technology shift.
Well, best of luck to you on that endeavor, Vlad. Certainly propagating crypto is aligned with the Bankless mission. So appreciate all the work that you're doing there. It's been a pleasure.
Thanks, guys. Always happy to be here.
Got to let you know, of course, Bankless listener, none of this has been financial advice.
All right, there we go. Not a bad pod by Vlad from the crypto angle. Again, if you're long Robinhood, I think it's important to understand their crypto intentions. And dude, I just think in terms of how they're trying to approach this, I have not seen a more disruptive financial company than Robinhood. Credit card, options, equities, crypto, cash sweep, the gold business. I mean, there's just so much stuff going on, and they acquired this AI company. Like, there's a lot going on there. So I think this one is going to be a good one to go long on. I think more and more people are understanding Vlad as a visionary, and he's doing really well with getting people's attention when it comes to independent media and accessing distribution. So awesome podcast. And the jobless numbers tomorrow, I think we'll see some broader reactions in the stock market. Palantir $31.04 after hours. Robinhood 1876, up about 0.5%. Fortinet up a little bit. Nike up 3%, lost that 5% gain after Bill Ackman bought. Ulta still up 13%. TerraWolf up 12.54% after Druckenmiller bought. Let me check Adobe. Is that up? That is down. And then Melly, he also bought. That is also down. So those are the moves after hours. S&P is green at 544. Had a great day. It had its 5th green trading day in a row. So it's great for the S&P. Again, putting an argument to the bears that maybe this is not a bull trap, that this is a real recovery. And QQQ as well, flat on the day, but green after hours and slightly green, up 0.03% on the day. All right. That's it for me. There's still a little bit more of me left for the day. At about 7:30, I will be uploading another video, which is a 22-minute diatribe, if I use that word correctly, about me talking about Palantir and its relationship with the media and what that means for investors. So I think that'll be a good one. It's just me talking. It's one of those OG Palantir videos I made back in 2021, where I was just like, in 2022, where I was just like theorizing about stuff because we had a lot of deals to analyze, but the stock there wasn't a lot of price action to look at. It was just like, all right, here's what could happen for Palantir and healthcare one day. So it's one of more of those OG videos. You can check that out in a few hours. It's not a 33-minute voice note. Although I'm just saying, dude, I don't like 33 minutes is a lot, but I don't think it's like, if you're interested in like listening to your friend, I don't know, 33 minutes is not crazy. So I wonder, I need to text Artish here this morning if he actually listened to it. Like, I'm curious if he legit listened, because there's no way, dude, he actually took the time to listen to it. Like, I texted him after the market open. I was like, dude, I did not even realize you sent, like, you didn't, I didn't even know you texted that you would send $200. And he was like, it's all good, man. The live stream was awesome. But there's no way he listened to that, dude. He has kids. There's no way he spent 33 minutes listening to it. If he did, though, that would be some dedication. Did Robinhood say the net income for the quarter? No, they don't announce net income, but we'll know that. I mean, dude, I can give you the numbers. Like I already started working on my Q3 modeling, and if they keep up the numbers they're keeping up, crypto will go down by 20 million. Options will go up by maybe 30 million. I'll share it eventually as I work out the more number, but it's just like math. When you look at the historical data and the revenue, it's like really easy to deduce the revenue. I pretty much got the revenue right at 650. I mean, they did 682, so I was off by 30 million, but I didn't account for some of the beats they had in margin. But their quarter, that's why I knew Q2 would crush. That's why going into earnings, I was like, well, I know Q2 is going to crush. I just don't know if the market's going to react to it. And so far, the market, slightly reacted to it at 1875, but the market didn't really react yet. But I knew it would crush. So we'll know going into Q3 if they're going to crush. It's just going to be a question of if the bullish sentiment is going to be there enough to justify the market carrying. How the hell can you talk to yourself for 33 minutes? I don't know, dude. But when I start talking, I start talking. So I sent him that voice note yesterday, and the video today is going to be 22 minutes. So it's 10 minutes less than the voice note. So hopefully it's an easier listen. It was so funny. Like, his text yesterday was, I will pay you $200 to make a 10-minute video on how your life is going. Please upload it. And I was just like, dude, like, I'll just send you a voice note. Like, I didn't even notice he said, I will pay you $200. Like, that part didn't, I was at the gym. I just heard, like, he just wants to know how life is going. I was like, dude, I'll just send you a voice note tonight. And then the voice note ends up being 33 minutes. And I guess he got value for that $200 if he got 33 minutes of me. So what do you think the reason is the market's not reacting? I think it's the jobs report tomorrow. Someone mentioned that in the super chat as well today. I think the jobs report, that's a big one tomorrow. If that comes in bad, market's going to tank, because then the market's going to be like, well, we are definitely going to have a recession if the jobs numbers are going bad. The consumer's struggling. Home Depot already said the consumer's struggling. Disney said the consumer's struggling. 25 basis points is not going to help the consumer. You're going to have Jeremy Siegel come on asking for a emergency rate cut tomorrow if the job numbers are bad. Like, if the job numbers are bad, there's no way you can buy Robinhood right now, right? Like, a lot of these stocks, you can't buy them if the job number is going to be bad. So I think tomorrow is going to be make or break to prove if this rally is real or not. And hopefully unemployment data is not that bad. So we'll see what happens tomorrow. All right. We'll be back 8:45 a.m. tomorrow morning. We'll keep going. and do what we need to do. Eddie said, I tried to listen at 1.75 speed, but Amit speaks way too fast. Yeah, this video is going to be me talking fast too, because it's literally just me talking for 20 minutes straight. I think it's like 5 minutes of me showing my screen, and the next 15 minutes is straight talking, bro. So this is one you could just put on the background, and I'll be talking fast, even though it's 20 minutes. All right. Thank you, everybody. We'll see you tomorrow morning. Hopefully you had some good streams today. And let's see where this goes tomorrow. Alibaba, Walmart. I'll go deeper into this Ulta buy, Nike buy, and we'll get those job numbers and see how things turn out. All right. Thank you, everybody. I will see you guys tomorrow morning. Good night. Amit, if you had to pick one flower, what would your favorite be? It would be any flower that's in a needle stack. Think about that. Seriously, think about that. All right. Good night. Bye, everyone.